Good morning, everyone. It's Monday, January 30th, and we've got a very exciting week ahead of us. If you've made it this far, I hope you've had a great first month of the trading year. It's one of the strongest starts to the year ever, or I suppose on record, if that makes sense. So if you're not making money so far this year, something's definitely wrong. But that being said, yeah, very exciting week this week. Last week we had rumors of LUCID takeovers. Tesla just absolutely rocketed. But this week we've got FOMC and we've got tech earnings, Amazon, Meta, Google. So very exciting stuff. Very exciting stuff. What are you guys watching?
SoFi earnings came in very positive this morning. The stock is up this morning as well, holding some long positions on that. So looking forward to a pump today.
Nice.
Morning, WallStreetBets. What's up, boys and girls?
Morning Tuesday. What do you got for us?
I'm gonna talk my shit in a little bit. I'm gonna talk big shit because I called out Lucid. We'll go back and look. It was a February 3rd call at $8.50, 10 cents per share, and somebody on here tried to fucking clown the shit out of me like they always do. I bought 100 calls. Who got paid?
Very nice. What's your total gain on that?
Let's just say it was over 20.
What's that game for, homie?
$20.
You go back and check my record. $20 D's.
Very nice.
335% gain. How about that?
Easy.
Hey, I'm trying to lower your PMs.
Nice.
I don't want you to get all these PMs from all these girls,
They be mad at me over here. I don't even know why. But let's talk real talk, okay? So I've been here for almost 2 years. I ain't really say much the first year or so. I show you I'm holding bags of AMC and I regularly get clowned. So I come with my picks. I talk how I do. The first 4 weeks in Wall Street, I'm up big. All my any option I gave you guys this year, they all cashed out in the green. Let me. There was one more cat on here who was talking big shit again, right? So I made my call right real fast. I'm gonna give you the calls for today, and I'm gonna give you my option call real quick for today, okay? But I'm 5-0 on options this year, and so I'm unorganized. Let me go through my notes real quick for you. So the options call for today, actually I played it on Friday, is DBI. Expiration is 2/17. Strike price is $10. Cost, 85, 82, 83, however you get in the door. Okay. I'll give you what I'm watching, and
Hold on, that's DBI Delta Bravo India?
Yes, sir.
All right.
Okay.
Are those puts or calls?
That's calls, sir. Okay. And then so what I'm watching, I like watching my penny candy. BZFD. FRGT. I did call out FOXO last week. They clowned me, but we got paid. FOXO. ATER. Of course, we got LCID. We got PBTS. I got two more for you fellas. We've already been GNS. And then I'll finish with PEV. That was the call option. I believe a gentleman said, you're buying my calls. Good luck with that. So on that, I cashed out on Friday, up 287%. So thank you for that free money, my friend. I appreciate you selling me that. I really do. Thank you. I got a couple more if you want to hear them, or I can go back to doing what I do and get this money.
Let's cycle through some other speakers.
Fair enough.
Who else is, please?
Oh, I'm sorry, real fast. Calm. My play. That's my play all day. CALM, right? The news is, hear this shit. Go figure this. And I have an alibi. I didn't do it. 100,000 chickens died in a fire.
Yeah, we heard that. You're
okay,
right.
so that's my play. I'm not as dumb as some of y'all think. And the last one, I played DWAC big. And I think with this announcement of Trump, I think we should get it in. My DD, since you guys like DD, the 52-week low by 8%. Its volume is low and its short float is about 7.9. So the 50-29, I don't know. If you know what I'm talking about, you know what I'm talking about. And lastly, Lion, LION, it's a spec, possibly If you understand that lingo, you got that. And one more, BBAI. AI will take off. I mentioned AI a couple weeks ago, maybe the beginning of the year. But last time I'll say this, Lucid call was 2.3. I told you strike price was $9.50. The cost was 11 cents. I sold at 16.80 at almost at the peak. And you do the math on that, fellas. Y'all are pretty smart.
Wait, those chickens died? My mom said they went to live on a farm in the country.
I just
Where they
borrowed them
go
for
to
a little
die.
bit. I'll bring them back.
I
I
don't
think
know
living
what's
on the
better.
farm was the issue.
Now, it was a fire.
Hardy, how have you been? What's your view on the markets? We haven't heard from you for a while.
Yeah, Hardy, let's talk to you.
Sure. So good morning, everyone. I believe FOMC comes out on Wednesday, right? Current expectation is for a 25 basis point rate hike. That may or may not be true, hard to say. But in the event that the unemployment numbers start climbing faster ahead of the Fed announcement, all the more I will be more bearish on SPY. My current stance, this may change between now and Wednesday, is to buy 20 delta puts on SPY at around 1:50 p.m. ahead of the announcement, just in case J Powell does something funny. Today, I'm looking at Palantir, March 17, $7 puts for 45 cents or less. Cisco, March 17, 47.50 puts for $1.15 or less. Vail, March 17, $18 puts for 75 cents or less. Coinbase, March 17, $60 puts for $8 or less. And Peloton, March 17, $12 puts for $1.25 or less. These are stocks that have crossed Gamma Max over the week, leading into the weekend. Gamma Max is the price where a hypothetical portfolio of the options open interest has the maximum gamma in that portfolio. And then delta neutral plays are also out. IWM, which is the Brazil ETF, March 17, 189 puts for 475 or less. Oh, sorry, IWM is the Russell 2000. EWZ, which is the Brazil ETF, March 17, $29 puts for 85 cents or less. PBR, which is Petro Brazil, for March 17, $11 puts for 45 cents or less. QS, I forget what they're called. March 17, $8.50 puts for 75 cents or less. And UNH, which is United Health, March 17, 480 puts for 985 or less. These are all stocks that have crossed their delta neutral. Delta neutral is the price where a hypothetical option portfolio made up of the option open interest has a combined portfolio delta of 0. And then a couple ground rules. I try to sell half on a double. I only risk up to 1% of my account for each individual trade. And the remaining half, assuming it does double, I will hold until I find a better use for the money.
Have you seen anything with any of the big tech earnings coming out, like Opinion has stated? We got Apple and Amazon on the same day, right after the FOMC. Have you seen anything besides your neutral?
Let's see. My thing with tech is Meta is leading the way because they're sacrificing margins for revenue. Amazon is trying to make money with their excess warehouse space by selling it to 3PL providers, third-party logistics. There was a report earlier that cell phone sales are lower than expected in Q4. I think it was 14.9% for Apple and 22% for Samsung, and it just got worse from there. So Apple right now is relatively close to their gamma max, and it's just crossing below delta neutral. So I'm near-term bearish on Apple. And then Amazon. Let's see. No specific plays on Apple yet. I'm waiting for some confirmation moving past delta neutral. Amazon, moderate upswing. Okay, fine. I'm waiting. If the price goes to 105 on Amazon today, I'd be looking at puts targeting roughly $96, $97 within, let's call it 60 days. That's my opinion, of course. Things may change if suddenly J Powell reduces rates.
Well, that's what I was going to say. If there's some inflection point there, we've talked a little bit about price before. Would you maybe even wait to that 2 to 230 period? Because a lot of times they put out whatever the rate hike is. There's usually, in generalization, but the market goes up, and then Jay Powell comes out and tampers down whatever it is, and usually there's a big price drop. Have you used that in the past, or is
Three,
that being too nimble? Like
the
waiting for the market.
last three rates announcements, the market dropped on the announcement. Then Jay Powell talked, and it came back up on optimism. Things, we're being hawkish, we're being dovish. We think there's an improvement in the economy, and then it drops again because he doesn't actually give the plan for the improvement. So on Wednesday, if you'd like to do this opinion, we can probably host a separate talk starting 1:40 p.m. Eastern time, so that we can have the discussion on Jay Powell and how to trade it. Oh,
Hey,
excuse me,
fellas,
Fed funds rate and how to trade it. Tuesday fly, you could probably
got a couple more call options for you fellas. Since
hear
we
it.
don't like, I jumped into them on Friday. I'll do my official post in the group, but let me log into my E-Trade account real fast. I bought 3 of them. 2 of them are in the green already.
Just real quick, Tuesday fly. If you
Yes,
guys are
sir.
ready to talk come Tuesday or Wednesday, throw up the Doge for Hardy for taking his time out of his day to come in and do that talk with us. Throw up the Doge for him, please.
All right. So I mentioned this once before. This is an older one, but somebody may not have been here. It's RIG, R-I-G. That's a May 19th, $8 call. I'm in the green on that. Friday, I bought more of gold, February 17th, 20.50 calls. Then I bought ET, February 17th, 1350 calls. And I think I did mention DBI again, February 17th, $10 calls. I appreciate it, fellas.
And then if you wanted to hear some Tardstrology, I got some unfortunate news for you. Tardstrology has been blanketed by clouds today, so unfortunately no Tardstrology reading, but I do have 2 degenerate plays that didn't close out that I'm going to be redoing. That Dole play, $17.50 strike price, dated for 8/18 at 5 cents a share. I'm still looking to get into those, and I'm also looking to get into LUCID again since they added more options to the chain. I'm currently looking at the same date, 3/3 or either 3/10, whatever I could get them cheaper for, $35 strike calls for 3/3 or 3/10, which is shortly after earnings. This is a ballsy play. This is in preparation for a possible short squeeze. So I could definitely lose my ass on these calls, but I have the shares, so I'm not entirely worried. But I'm looking to get into those calls. And
What's
that's your
Lucid trading at right now?
It's at like 13 something.
Man, you are definitely bullish.
Absolute degenerate right here. Your boy is a living legend, by the way. I made $343 on that call, that $10 call on Friday, because I sold on the way up. I admit I was a paper-handed bitch because I could have sold at the top. To stay fly held in. He held in. And I gotta commend him because he sold close to the top. Congratulations to Stay Fly. You did work and you got it in.
Actually, my computer does
Max,
a lot of work,
you
sir.
need to give yourself some more credit
Yeah,
because
you do
you're
too,
just
sir.
now starting out at this, and you already got a multi-bagger. Congratulations.
Yeah,
As long as you
Thank
get some
you.
green, man, everybody gets, you get them soggy hands sometimes, but you just gotta just get out where you get out and never look back. Just, don't never look back.
You stay real quick. Mask, ladies and gentlemen, he just opened his account like 2 weeks ago, and he went into SoFi and brought some Lucid calls. I mean, he's been loving Lucid all the way to the bottom and and like rahaing him like a cheerleader.
I try to talk about sorry to interrupt, but I try to talk about fundamentals, and of course, Rad pointed out it was his first option trade, so he was gonna.
Yeah, he didn't give 2 Fs.
No.
He said, "Get out of my way," and he went in. And I mean, Lucid, give him a car already. Come on.
The first one is always free, guys. That's the rule of options. So just go super balls deep if you're just starting.
That's what I'm holding mine. I'm gonna try to make like 3 million on it.
Did anyone see the volume? The pre-market for Lucid? Pretty crazy.
I think all the folks who chased Lucid during its SPAC run are coming back out of the woodwork.
I'm just here to plug Nintendo. We're almost up to $11 a share.
Woo! And so, question for you and everyone here. So, does Lucid become the next GME or the next BBBY?
I'm taking a different approach. I'm going to see if I can do a buy right against Lucid, because right now implied volatility is especially fat. And I think a lot of that's being driven by irrational buy of calls. So if I can sell, let's see, prior to the run at the $6, if I could sell maybe a 650 call for, buy 100 shares and then sell the 650 call, that should be a nice fat premium for me. I need to do the math, but I think it'll work out.
I guess a better question would be, do we think that Lucid will rise from the ashes like a phoenix, or will it rocket up and then just explode like a challenger?
That's the beauty of covered calls. It doesn't need to.
So rise like
I got a question. Why are they so mad at me in the comments?
Don't worry.
Because you're making money and they're not.
Thank you. I want to do this.
100%.
Yeah, the way
Don't
I
worry
announce
about that.
games to stay is usually in percentage, so they don't know how big my positions are.
Fair enough. I like to show my balls.
I always assume you have the biggest position target.
As long as they don't touch your taint, right?
Hardy, I was
And
asked.
just-
I was. I'm
Go
sorry.
ahead,
I
Dave.
interrupted.
I was just going to say real quick, guys, ladies and gentlemen, Tuesday Fly, if you're going to come with big game, you got to expect, big criticism. And if they're not talking, you're not loud enough. That's how it goes. At least that's what I heard. And I think Hardy's a great expert on handling the criticism, because he brings in a lot of value to this group, and people do like to comment behind keyboards, but he still brings it. So big ups to everyone that keeps bringing it at the end of the day.
Yes, sir.
Right. So here's a hypothetical play for Lucid. If you're doing covered calls and you want to capture that premium, buy 100 shares at $13 a share, and then sell the February 3 $6.50 call for at least $6.75. So that effectively gives you 25% excess premium relative to the cost of the collateral. And then no matter where, as long as the price doesn't go below 625 by February 3, you'll walk away with an annual, you walk away with 25 cents over $13 collateral, so about 1.9%, which is an annualized 455% per year. So if you can do that hypothetically every week for the year, you'd make 400%. That shit scales.
Now, do you think the IV is going to stay that high? I mean, I know that's hard to tell, but with those
It's not sustainable at this. IV isn't sustainable at this height.
Okay, that's what I thought. I mean, that's kind of a hard.
So you need, in order for you to hit that like annualized return, you need to have a different stock with IV that high every week. And I know it's not possible. So when it does get this high, because open interest on these deep in the money calls sometimes is too low, I'll buy multiple strikes but adjust the price to reflect the return I want for the collateral I have. So if I buy 10,000 shares of Lucid, for example, I'd probably use that as collateral for 100 contracts, but different strikes from, let's say, 5 to 8, wherever I can get them for a good price.
Almost like a bond ladder, but an option ladder, right? With the dates.
In this case, same date, Same date, different strikes.
Different strikes, excuse me. Thank you. I'm a bit of a rookie. You weren't on one of the calls. I've been in the business basically 20 years. I've never traded an option yet, so I'm going to delve in here soon. So thank you. I'm here to learn, and I appreciate your commentary a
No
lot.
problem. There's a couple Q&As I've hosted and AMAs here on WallStreetBets, so I'm sure that's a good place to get started.
Thanks. Appreciate that.
I'll also plug Tasty Trades. I think that's what it is.
I think
So,
Tasty Works is the channel.
Yeah, that's right.
a stock that's well above its gamma max and delta neutral, should it pull down? Is that kind of what your chart is implying?
No,
Like it's going to.
The relative distance between gamma max and delta neutral doesn't really matter for me. What I look at and pay attention to is the reaction to crossing those prices. So if a stock over the last 3 touches of delta neutral from the bottom always goes back down, there's a good chance the 4th time it does that, it'll also go back down. And that's the basis for my trades.
Oh, it's about catching it when it crosses, not I suppose like it might be above. Yeah, okay.
It's using the crossing event as a point of a reaction, or as the point where you measure a reaction. You can go the other way. You can go the other way and try to measure what percentage of days were this far on a percentage basis from gamma max or delta neutral. But one, that's a harder thing to track, and two, it's an even harder concept to explain.
So basically, he tries to decide whether or not he should throw the knife or catch it.
More or less. The whole
like I've never been following a stock that's actually gone over your gamma max, so I kind of am just curious to see what happens.
If a stock price is pretty much if a stock is ignoring its delta neutral or gamma max, there's a very good chance the amount of shares represented in the float by options is very low, and therefore irrelevant. Well, and therefore the willingness or sensitivity of institutional participants to these levels is lower. That's partly why when I'm putting out these plays, I only focus on stocks or tickers with 20,000 contracts of open interest or higher.
Excuse me, Hardy. I'm not sure how I'm supposed to jump in here when I have a play. What's the proper etiquette so I don't make none of these peons mad anymore?
Post the play in the comments. Post the plays in the comments, and then when there's a lull or someone asks, "Hey, does anyone else have plays?" you can jump in with that list and
Fair enough.
find them that you posted in the comments.
Okay, cool. And I'll add for side note, Hardy's been over to my personal channel too. So me and him we got this. Appreciate you, Hardy.
I appreciate your plays, Fly. They're good.
Not always, but they're good.
Absolutely not always.
And the way the scanner works and the thesis that he's trading, then you can adjust your risk accordingly. And I'm always open about how these plays are generated, so you can always check me.
Yes, sir. Appreciate you.
We wouldn't be degenerates if we checked you, Hardy.
Some people have offered really interesting insight, validating or trying to invalidate these ideas. And it's always nice being able to explain why or why not and have that healthy discussion.
Keyword healthy.
As long as they attack the idea and not the person. There's a certain reporter among us who goes for the person first.
I like that. I like the mentality of the idea, not the person.
Look, I have like a dozen followers, and I'm pretty sure most of them, or like 2 of them, aren't bots. So you should really follow me. I'm just kidding.
You should not follow me. Like, stop doing that.
Before we go too far off track, does anyone else have plays to share?
I do have a question. Didn't we have like some federal like release come out like before market open? I could be wrong.
Well, apparently none of us know about it.
No, I was going to say, I think there's just earnings and probably just the talk of the Fed meeting come Tuesday, Wednesday.
Are you talking about Yeah, there's nothing today. For tomorrow, we have the S&P Case-Shiller Home Price Index and the Consumer Confidence Index, and also the rental vacancy rate. But yeah, nothing today releasing.
Rental vacancy rate will be interesting.
Yep, that's a 10 a.m. tomorrow, and that's Q4 for the period of Q4.
Is anyone playing tech earnings this week?
No, but I think tech is gonna be bad. For me, it was Microsoft that gave the catalyst for on the whole tech sector.
Has Microsoft done any layoffs yet? I haven't seen them.
Yes, pretty much the only mega tech that hasn't done layoffs yet is Apple. Is the short version.
Yeah.
Yeah, I heard.
Well, it's gonna suck for all those people who posted on TikTok about their office at Apple.
Well, I heard Tim Cook took a cut, so people didn't get laid off apparently.
Yeah. They dropped him down. I want to say it's times X21 times 21 salary, like median salary now, something like that. The cap.
His bonus or his cash earnings were cut 40%, but you have to understand his salary is the same. It's his bonus that was cut.
I mean,
it's like the Google execs in the wake of the layoffs. CEO announced that their bonuses would be cut, would not specify by how much. And it makes sense because the ads guy would probably have a smaller cut than the, let's see, what's a failing Google business at the moment? Than the Google X leader or the Daffodil leader. Because I know those are underperforming Google business units.
I remember Greenspan when he was talking years ago about how he was surprised at how willing the employees were willing to take a pay cut and squish down their earnings. I guess what should we be watching to try to see when that's getting squished, like contract settlements, union settlements? We want to wait. I just don't know what we should be watching.
that's a good question. I did see that the median income was like 300,000, I think, in Google, and so that to me says that there's some room to move before people really start to, lose something.
Does anybody here have a regularly?
You cut out in the middle of that.
Does anybody have TikTok that they use regularly?
Everyone around me does, but I hate it.
Well, I don't know that you would go viral, but you would become a legend on WallStreetBets if you would do a mockery of the "here's my life at Twitter" or my life at Google. If you clock in at the Wendy.
Well, WallStreetBets is a relatively small community relative to to TikTok's active user base.
Yeah, I don't think many Wall Street bettors use TikTok aside from myself.
And those people who talk about average work at these tech companies often are in roles that do not produce revenue or relatively little value. So think like operations, accounting, low-level product management, and outbound recruiting for HR. So take those with a grain of salt.
Yeah, I'm just saying it would be hilarious if you'd be a legend around here.
That's so who else has a place to share?
I got one more. I'm looking at SoFi, the options chain for 217. I'm looking at these $7 strike calls. They're really cheap. They're 17 cents a piece. So if I can get those, I'm going to grab those too.
Are you bullish long term or short term on SoFi?
It's basically the same thesis as fucking Lucid for me. It's all short information that I'm following. But yeah, ultimately I am bullish on SoFi for like the actual catalyst that they're going, like their options. It's freaking awesome. Well, at least my experience has been awesome. I made money. I made a ton of money. Well, not a ton, but like I made a lot more money than I thought I was going to make trading options. So I have a bunch of capital to utilize on these plays, and I'm looking forward to either losing my ass or fucking making a ton of money.
SoFi beat earnings this morning. They reported at 8 o'clock this morning. They beat, their stock is up almost 10% pre-market.
Are we gonna talk about the response that Donnie had? That 413-page response. I pulled up the PDF on that from the Adani website, and I know there's a lot of criticism regarding their response, but just looking over the pages, overall the response is very detailed as to the accusations from, how do you say that group? Heisenberg?
Hindenburg?
Whatever. Yeah, Hindenburg.
Hindenburg.
Okay, that shorts that hedge fund, whatever it is. And yeah, it's very detailed, but I can see that they don't explain fully. It looks like they're just pulling examples out of that are
So
irrelevant to each accusation or allegation, let's put it.
my problem with Hindenburg's research is it's hard to vet. They always list a
Yes.
disgruntled employee or former senior executive as their source. And the problem is
Yeah, they
anyone
did
can
admit
put
to
that
that.
sort of detail. So it's the way I play Hindenburg announcements usually is what's it called? Usually is sell cash secured puts at the roughly 30 delta after the announcement, because it represents a 30% chance the stock will fall to that price in the wake of the news, unless even more bad news comes out. And that's only happened once in the last at least 3 years of Hindenburg's Hindenburg's research papers.
They're little whistleblower reports.
Whistleblower. Well, like Hardy said, they Hindenburg was stating that they did talk to disgruntled employees, and that it's basically people that are not aligned with Adani Group's goals. So it's definitely taken with a grain of salt on my end.
It's
'Cause
people that already have an axe to grind against the company.
yes, now
So
you could believe them or not. It's up to the individual. But I'm just looking at the 413-page response right now from Adani, and they're pointing out each allegation that Hindenburg had, along with definitely financials, their partners, and the relationships they have. One of their relationships, they just state all of their banking relationships that they have. They state all of their uh, government subsidy partnerships as well. I mean, they're going in detail on these allegations from Hindenburg. So it's hard to believe Hindenburg, because I know the criticism over the weekend was Hindenburg stated that, oh, they didn't respond to all of our allegations. They only responded to the allegations that are in the number 70s and 80s. They still didn't respond to the allegations from the 60s and below. Still, they responded to all these allegations. I don't see them not responding to any.
I mean, the fact it's a 413-page report, I feel sorry for the poor interns who had to work on that.
That's true, yeah. That's
If,
true.
if you read the report, it's 400. It's, let's call it 395 pages of fluff and supposed evidence. The best way to consume that kind of report is just to feed each section into ChatGPT and ask it to summarize for you.
Yeah, that's pretty smart.
Yeah, and I was just going to state that naturally they actually didn't have like a day to respond. They had like 5 days to respond. So I think we should clarify that. And then furthermore, Hindenburg did respond almost immediately with the 413-page report they came out with. They responded to that. So it's just going to be a lot of back and forth. And I do want to add one little caveat. People talk when they exit. They don't talk when they stay.
It was also interesting how Hindenburg entered their position against that company. They had to short bonds. They couldn't and trade certain derivatives that are otherwise not available. So the ability for their followers to participate in this particular play is likely to be lower than other plays against U.S. companies.
Hardy, I definitely agree with that, but that's, isn't that most just Wall Street hedge funds? They have access to what the average retail investor doesn't have. I mean, some of these hedge funds, they have access to credit default swaps that normal retail investor doesn't have.
Well, I mean, if you have the roughly, $40 million in collateral to put up for one contract, you're welcome to trade them yourself.
No, I understand. I'm just doing devil's advocate to your point that you said you found it weird that Hindenburg's position.
Hindenburg, let's be clear, is a research company, a research outfit. They make their money publishing negative news against companies that they had bought short positions in roughly a week prior to the release.
Wow, that sounds like they're market manipulators.
Well, it falls under free speech Latter-day. So as long as they explicitly state that this is their position and they're open about what they're doing in their research methodology, they won't be accused of market manipulation. Or rather,
Sheesh, that's some shady stuff.
They won't be prosecuted. They'll be accused of it. They won't be prosecuted for it. That's an important distinction. And that's also why I'm comfortable posting my plays along with the methodology. If I just put the plays blindly, that's a little more risky on my part.
All right, y'all want to talk about earnings?
All right, yeah, let's talk about earnings.
All right, big earnings this week, and I got a bunch of tickers, so I'm not gonna throw out strikes, but here are ones that you need to enter today if you want to get in on them. Confluent, they're a tech company, bullish. Whirlpool, they make hot tubs, neutral. Shout out to Benton Harbor, Michigan. NXPI, semiconductors, bullish. AGNC, financials. Financials have been doing good, also bullish. GM, bullish. UPS, neutral. McDonald's, neutral. MCD. Pfizer, PFE, bullish. Caterpillar, CAT, neutral. Spotify, bearish. GLW is manufacturing. They're what's their name? It's like Concordia. Bearish. XOM, which is ExxonMobil. They're I don't know how I'm going to play that yet. I got to watch the price of oil this week. Same thing with MRO. It's Marathon, and Phillips 66, which is PSX. So those are all reporting either tonight or tomorrow morning.
That's a lot of earnings.
It's a big week. Later this week, we got Apple, Amazon, who else? Microsoft, Qualcomm, Pepsi. All right, no, that might be next week. Google. And a lot of them are actually happening on the 2nd, all on the same day. So we will see if there's going to be a massive surge in the NASDAQ or the last nail in the coffin for tech by beginning of next week.
With the downturn in the pre-market from what we're seeing, anybody thinking of picking up some cheap calls on the SPY today, or?
With the Fed fund rate coming out, I don't know if anyone's going to be bullish in the near, at least through this week.
So you think we're going to tank after the announcement of 25 to 50 basis points?
I have sold puts on SQQQ at the like 36 and 38 strikes or somewhere in that range.
Ooh, okay.
They're starting to pay off. So
Gotcha.
net of
Nice.
all the puts that I've sold short, I can probably afford to start buying calls effectively risk-free because of all the premium I've harvested. And we're about, if the price goes to like 32 or even 30, then I'm definitely buying medium term 2 to 3 month calls on SQQQ. So just something to keep in mind if you have any particularly bullish plays.
So
I have
we're
scrambles.
mostly pricing in a 25 basis point hike. What's the likelihood, if there is any, of it being higher than that?
Let's see. So there are websites where you can gamble on outcomes. It's called Kalshi. Well, if we go to kalshi.com, Kalshi, I'll drop the link in the comments, and we look at the market for Fed interest rates. Let's see, is this the right one? Yeah, so copy, put this, I dropped the link down in the comments. We look at Kalshi and look at the Fed interest rate. The expectation, for the most part, is that the Fed funds rate will be above 4.75%. It's currently 4.5. So the vast majority of Kalshi gamblers think that the Fed funds rate will not go to 5% or represent a 50 basis point hike. So that should give you a sense of confidence in that marketplace.
Also, at this point, I think Jay Powell is not looking to surprise the markets in any way. So if the market is predicting or pricing in 25 basis points, then I think that's what we're going to get at 25.
Keep
I
in
think the
mind
Fed is just going to stick to what they've been saying all along
that
and not
morning
surprise more.
that morning we'll have non-farm employment and JOLTS job openings. So there is a plausible reason for Jay Powell to go away from what's expected. So it's not 100. It's not as guaranteed as previous announcements.
So
Most
you think
unemployment
there's
claims and unemployment rate come out the 2 days following. So depending on Jay Powell's comments, we need to see unemployment go up. If unemployment claims and unemployment rates stay flat or go down, then that may signal to the market that the March hike will be 50 instead of 25 basis points. So that's just something to keep in mind as we go through this week.
Hardy, do you think? I know previously Jay Powell hasn't surprised the market, so you think moving forward this year, you think Jay Powell's the possibility of surprising the markets is pretty much increasing since you're saying there's a chance that Jay Powell is not gonna stick to its plan for this year?
If you listen to if you look at the transcripts or listen to the talks live, is it 3 rate hikes ago, maybe 4 now? Jay Powell slipped and said they were targeting 5.5%. And that's what caused the markets to tank hard, pretty much like 90 seconds after he said that. So I imagine something similar may happen during this talk, during this announcement. And that's what's driving my thesis for the 20 Delta puts prior to the announcement.
So you think that was intentional? That slip?
No. There was no way that slip was intentional. But the fact that he effectively revealed a part of his hand showing the highest he was willing to go, and at the time was 125 or 150 basis points away, all the market participants got spooked. And most interestingly, if you were watching the speech, you could see how uncomfortable all the reporters got when they heard that particular number. Because at the time it would represent a roughly 30% increase to the Fed funds rate, or not quite 300 basis points, but you would go from effectively 300 to 400 basis points, which reduces your leverage from 33% to 25%. think I did that right.
Hardy, do you expect SQQQ to get down to the low 30s short term?
Short term, I don't, but I have a buy ladder set up if it does. So if there's like retard buying strength pushing the price of SQQQ down to 30, I have buys roughly every $2 from 36 to 30. If that makes sense.
Gotcha. Well, I've got 175 shares at a cost average of $48. So retards, don't do this to me.
Yeah, for what it's worth, next time sell puts.
Yeah, I didn't think it through. I thought 2 weeks ago it was going to go the opposite direction. I missed my timing by a good week and a half.
Have we talked about the Chinese government buying a stake in Baba?
Is it buying a stake or being gifted shares? Like a different voting class of shares?
I feel like we've talked about that thing to death.
I thought they were buying a stake. You can correct me if I'm wrong. I don't know if they were.
You need to read the original press release in Chinese to confirm. I suspected there were some mistranslations going on, and it's for that reason I currently avoid all Chinese stocks except Yang. And for those who don't know, Yang is the 3x inverse bear ETF against China. So if, like RSX, which is the Russia ETF, if China, for whatever reason, stops trading in its markets from foreign investors, the value of Yang should skyrocket because the effective collateral went to zero. Is it going to happen? Probably not. But if there's another shutdown, especially in a major manufacturing hub, then all the more reason Yang will skyrocket.
Oh, it says they had golden shares to the Beijing government, but they're minority stakes.
Yeah, so the gimme just means government probably has veto power on something that it has enough shares for veto power if Baba wants to do something. So Baba's free to do whatever, so long as it's within the sandbox that the Chinese government has defined and is constantly shifting.
Do we even have something similar to that in the United States where the government can just take control?
Closest thing I can think of is when they did the government bailouts, and then the government bought shares of the companies. But other than that, no, there's definitely nothing like that in the U.S.
I'm pretty sure martial law allows them to take over corporations and stuff, doesn't it?
Yeah, the U.S. has a similar law, but it's unclear to what extent the Chinese government will exercise that law, or its powers under that law. Because if they do, the foreign investment which drove the rise of a lot of their companies goes away. So a foreign company can't own more than 50% of a Chinese company. But that also means, at least in the seed level, or maybe up to, let's say, the first 4 series levels of investment, up to 50% of that company's investment round came from foreign money. So if you take that away, China's ability to grow, or those companies' ability to grow, is severely impacted.
Yeah, so there's like it's kind of a catch-22. They can put pressures on the companies, but they still have to stay relevant within the world. So it's they usually just switch people out of power within the company, and that's their power move.
But for anybody holding Baba calls, is this a bullish or bearish play for them?
I'm not going to personally comment on that. I don't know if anyone can. I always say just do your DD. But if anyone has an opinion on it, I guess we could share that.
So since we're so quiet about it, are most of us avoiding China right now?
I'm not avoiding China. I think China is opening. I think Korea is opening. Japan's opening. The COVID restrictions have gone down for Asia over here. I think the issue is just how is it going to pan out for the consumer, and how much are they going to spend on their flights, but more importantly, like when they actually make it overseas, wherever they decide to go, what is their spending habits going to be, and what is their long-term way of making money? Is that going to be
I
possible?
think when he said avoiding China, I think he's talking investment wise.
Yeah, not like.
Okay, sorry, my bad. No, well, personally, yeah, I'm not avoiding them. Some people are obviously cautiously. I think China is a great play. I think they have technology that's better than anyone right now. Unless you compare South Korea, I think they could par next to them. But yeah, I think they still should be on the books. The question is, as Hardy would say, is who do you go for right now? Maybe the best thing is to play the Yang temporary, but then they like playing the rug. They pull the rug under us, and they're up next week. So who knows?
So I have been avoiding China and will probably continue to do so until we see the fallout from Evergrande and the various bank runs that they had over the course of the second half of last year. So once normal economic activity kind of starts happening there again, like they had whole cities locked down, like that. Once it's a little less volatile, I'll reconsider it. But I don't think we've seen the full fallout from the super over leveraged banking situation in China, and either they'll have some kind of smooth landing of their own, or something's going to go really, really wrong. So yes, I am avoiding China right now.
If you're waiting for any news on Evergrande, I don't think China's ever gonna let that entity collapse at all. They'll just keep bailing them out.
Okay, well, that's fine, but they were invested in so much. The web is wide, right? So if we start seeing news about the government bailing them out, or we start seeing, be like they one of the things that is both bearish and bullish is they went back and they had a three red lines law that they put into place kind of because of Evergrande, and then it was just the end of 2022. They were like, "Oh, this thing didn't work, so we're going to get rid of it. I guess companies can still have that kind of leverage if they want," which to me is I don't know. That's China being China, basically. So yeah, until it's more clear what the hell is actually going on over there with their financial situation, I am avoiding it because, we could see something like Baba gets delisted by the New York Stock Exchange or whatever, right? And I don't want to have to put up with that. And I only have so much capital to invest, and there's plenty of space in the American market for me.
I hadn't considered the delisting, but considering like the microprocessors and stuff, I'm kind of with you there. It's starting to turn into like a deeper cold trade war kind of thing. It's weird.
If I was looking at what to do with billions of dollars, then I might think about China more deeply. But I've just got what I make at my damn regular person job. So like, plenty to do in the American markets.
Just wanted to throw it out there that investing in China doesn't mean buying Chinese companies. You can buy McDonald's and Starbucks, and the 200 million millennials there will continue to consume those products.
See, there you go. There's another solution.
But I think there's a barrier where if you want to buy a franchise like McDonald's in China, I mean, you need a lot of starting capital.
What was the other one? Restaurant Brands International opened like 400 Popeyes stores in the last 5 years over there.
There are plenty of Chinese ETFs as well.
One way that I would be much more comfortable having exposure to China would be in emerging markets ETFs, because for some reason, even though it's an economic powerhouse these days, there's this idea that China is the same country that it was in the 80s. Or maybe it's just that those funds actually made money and don't want to start discluding China. But yeah, China's still often considered to be part of the emerging markets grouping. And therefore you get a little more cushion.
For anybody that was in SoFi, SoFi stock gains after company gives upbeat 2023 earnings forecast. That was 2 hours ago.
Anybody in Newegg pre-market sales going on?
1 minute till open.
Come on, open the casino.
Let's get ready, get excited, go lose some money, go
Let's
win
go.
some money. It's Monday. Let's go. Get ready. I'm excited to go lose some
Opinion,
money.
give us a countdown. In 10 seconds now. At the last.
9, 8, 7. Wait, is it? Wait, what?
Still got like...
No, you're too early.
Oh, okay, I got it.
I can't wait to see my red portfolio today. It's gonna be good. It's a good day today. Less bags.
Everyone with me. 8, 7, 6.
Ooh,
5,
my bags are about to get
4,
lighter.
3,
2, 1. Open. Here we go.
Womp, womp, womp. Where's the sound?
Guys, you know the first 5 minutes of silence at 9:30 is everybody's checking their portfolios, including me.
Is it a Wawa day? Don't say it's a Wawa day.
Actually, kinda, because SoFi went up to like 658 and then dropped down to 652. Like as soon as he did that Wawa. Well, there's your daily Tarstrology, folks.
I'm rooting for you on SoFi. Their last earnings, they shot up a little bit and then slowly creeped back down over the next few weeks. However, they had slightly missed earnings right before then, so hopefully this one sticks.
Just revisiting a play I did earlier in the year, THRX. It's pumped back up again. It might fall again. I'll let you guys know in a week or two.
NASDAQ's already eating shit.
Guys, just remember all these layoffs that are happening every day. That's so bullish. I was really hoping we would rally till Wednesday and then take a nosedive after the announcement. Because now I'm getting scared we might actually rally after the announcement if we're dumping today and tomorrow.
I mean, just because we open low, all that means is we gapped. So a lot of times when we open low, it'll gap fill, and basically start low and come back up throughout the course of the day, often slowly, because there's still like the opening prices are affected a lot by overnight futures, and overnight news, whatever. But then there's still the idea of maximum pain and fulfillment of options contracts, and those only happen while the market is open. So the market can often adjust based on that and a lot of other shit.
I'm a typical bear, but as you said, thank you for that. Really hope we rally till Wednesday.
Damn. Shit, Lucid is fucking dropping.
SoFi calls up 300%.
People are saying Tesla.
Tesla's going crazy.
Anybody said Tesla? Anybody have Tesla calls? Anybody in the chat?
Yeah, I got some Tesla calls.
Oh, okay. Please go ahead, sir.
Yeah, I'm in some Tesla
I'm
calls
just waiting to. I'm just waiting to sell them pretty soon.
Gotcha.
Tesla
are
puts.
these? Oh, go ahead.
No, go ahead.
I'm done.
I was just gonna ask him if these are 0DT or 1DT calls he had, AI had, or if they were longer term.
I don't. There's no 1 day Tesla calls or puts. It's weeklies right now.
Nice.
Damn, Tesla's dropping pretty quick here.
Yeah, 175. Crazy.
Yeah, it looks like a shakeout though.
Right.
All right, I'm not going to be too degenerate. I'm going in on these Lucid $25 call contracts for 3-3. I'm buying 2 at $25 a piece. Actually, 28, my bad.
Did a lot of us pick up bags on Archer Aviation last week when that was mentioned?
What was that? Did you say bags?
Yeah, Archer Aviation. Someone mentioned it yesterday or last week. I bought it at like 8%. Just long hold, war hold.
What's the ticker, sir?
ACHR. It was a good share price, so I bought 420 worth,
I mean, it's I would say it's too soon to tell. Looks like it doesn't have a lot of movement yet, whether up or down.
Yeah, we might have been late. The 1 month's 40%.
Thinking about buying some Foot Locker puts.
I'm more worried about Tesla. Anybody picking up some cheap calls later in the day or no? Because it looks like a large move. It might reverse, but you never know.
Yeah, this is usually typical for Tesla in the morning, especially when it opens.
Oof, somebody posted Tesla calls position. I mean, pretty green. Nice job, man. Robot 141. Nice one. Oh my goodness, look at SoFi go. It's just, it gapped up. So bad. Anybody who had calls on SoFi, congrats. Dang.
That's right. And then look at Lucid fight this fucking gap or fight this forceful down with this gap up recently. It went from 1191 to 1207 in like a few seconds.
Yeah, my SoFi calls are printing nicely. I already sold half at 300%.
Woo!
So the rest of them were just riding free. Let it ride.
For astrology, how much are you up on those SoFi percentage wise? Are you thinking of just selling half and then letting the rest run?
Well, I don't have those SoFi calls anymore. I was looking to buy 2 more at $7 today, and it looks like those aren't going to get filled, so I'm going to have to figure out another play. I got 3 rods in the water right now though. I got that $7 SoFi call for 217 at 17 cents a piece. The Dole $17.50 degenerate call for 818 at 5 cents a piece. And then the also degenerate Lucid $25 call for dated for 3/3 at 28 cents a piece. So hopefully one of those catches something, and I got some options to look at. But right now I should be up very, very bigly on my shares in my stash account because my current price average on SoFi is $5.19. So I have a very hefty profit sitting and waiting for me right now.
Oof, people are saying Mullen in the chat. Guys, Mullen hasn't overall. Mullen, it's not a really large move for Mullen. Hopefully it's even larger for you guys if you have calls, but I don't see a large move so far in Mullen.
Well, I mean, for 1 cent is a large move for those fuckers. So
my shares are up 30% for Mullen.
For all of you short sneeze nerds, Atarian ATER is up a lot. What was it? Of course, I clicked away.
not bad, 18%.
Yeah. But if you look at the price action over the past few days, there's something going on there.
Yeah, I'm looking at it right now, Sleepy. There's definitely something here. I mean, it's not like super volatile, but there's enough action here to make this warranted and look at it.
Yeah, they had a huge spike in volatility on the 12th and a huge spike in volatility on the 3rd. And I don't know if that's just because they like import China garbage basically. So I don't know if it's news of China opening up or the shipping rates going down or if it's just actual gamma squeeze action.
for Human Genome. You have 300% shares in Mullen?
30%. They're up 30%.
Oh, 30%. I'm sorry. I thought you said 300. But that's okay. 30%.
Yeah, my average cost on those is what? Let's see. Average cost 25 cents a share. So it's up 31% right now.
Nice. Congrats. You thinking of selling some and letting the rest run?
No, not yet. I'm just gonna keep hanging on to them. For me, I think the company has some potential if they can get their production straightened out. So I'm just holding that long term.
Got it. Thank you, sir.
I'm not in a big hurry to sell them, so we'll see what happens. And the Mesa shares, those are up nicely too. Those are up over 100%. Mesa Air.
Ooh, that sounded like a good noise.
Sounded like a close position there.
Sounded like March is calling.
PLTR, Palantir. No move so far. I don't see a change here. If you have call or puts, I don't see much of a change. It's bouncing around.
Palantir has 2 billion shares outstanding. It takes a substantial move. It takes a substantial amount of money to move the price.
Sophie's up 12%.
Yeah, Sophie's a monster today.
Ape is up 16%. I don't know why.
Supposedly they announced they're going to do a vote on consolidating or combining the shares, merging the shares. I'm not sure who said it, but they said later on this month maybe there's a vote on converting the shares from Ape to AMC.
Whoever was talking about Palantir, their next earnings is on the 13th, so you're probably not going to see hardly any movement out of them until then.
Thanks for the clarification.
Question for you, Hardy, if you're here. We've got some gold level rolls in the Discord. So for people who've reached a top level of attainment or achievement in submitting due diligence, threads to WallStreetBets, or comments, or even playing in the casino, do you think that channel exclusively for holders of that gold pass would be valuable?
Probably not, because it depends how they got the gold, right? My DD is different from Daddy Dirsch, is different from whoever next receives DD Master. So I don't know if there'd be enough overlap for us to have productive conversations.
GME at 20%. GameStop's looking good.
At 20%? You mean 0.5%?
I mean, they're up. They're up, yeah.
No, I don't think it's 10% either.
To be up 20% would need the
they're
price
gonna be
to
at
be $26. We're not there yet.
Yeah, I see 0.39, 0.35, 44,
Oh, sorry.
0.44 now. It's all fluctuating. It's really
Sorry about that.
just
I was gonna say, damn, did
like
I
maybe he
really
saw
miss something?
20% for a second.
It's at $23. And
It's all good. All good. I think the value would not be so much in necessarily the overlap, although it might be interesting to give plenty of people direct access to different viewpoints. But in the fact that the chat moves slower, I have this theory that there's an optimal speed at which comment chains or daily discussion threads move. And if you get too fast, then the conversation breaks down. There's fewer replies to top level comments. And then the same would hold for a live chat like Discord. If it's moving so fast that there's more than 2 or 3 conversations going on, it gets extremely hard to follow. Not saying your chat is there yet, but I think there's some value in slower channels.
Feel free to try it, but I would suggest setting up a metric that you can objectively measure across channels and validate pieces.
What would you suggest?
Sure. I don't know if there's an API to measure like messages per minute on Discord or something along those lines. So you can get a sense of does the chat last longer if the messages per minute is lower?
I think from an analytics perspective, the more interesting metrics would be something like users who were like previously part of the server that weren't talking before and then after. So did the change incite more people to return to the server and talk, or how frequently, or stuff like that? But yeah, good ideas. Oh, Hardy, did you speak about your Porsche NFTs?
I bought 12. I sold 3 to cover the cost of the remaining 9, and now I have 9 free rolled Porsche NFTs.
Very, very nice. Only 3? How high did they go?
I was able to sell them for on average 2.4 Ether.
Wow.
I guess someone really wanted that color. I don't really understand why they were more valuable than the others. But those are the ones where my high bids were hit. And so, okay, you can have those 3. I'll keep the other 9. And now I can use that to borrow probably 50%. So let's call it maybe 12 Ether as collateral against whatever other NFT drops there will be. So if another high enough, rich enough brand will have an airdrop or a minting event, I now have much more powder to play with.
Where are you borrowing on?
I haven't set it up yet, but I'll probably do it on JPEG.
You should leverage those NFTs, Hardy.
That's exactly what I'm doing. Those NFTs are paid for. So let's say I bought 12 NFTs for 1 unit each, right? So that's 12 units outlay. I sold 3 of them so that I got my 12 NFT back, right? So I sold 3 for 4, let's say. And then of the remaining 9, my cost basis is effectively 0 because the first 3 paid for the full 12. So I can afford for the remaining 9 to go to 0, and my loan get called using those NFTs as collateral, and I pay 0 taxes.
You could also take out a personal loan and leverage further.
Nah, why would I do that? I've already got plenty of free rolled NFTs and other crypto assets. Like when Luna crashed. I bought in a good chunk when it was like $1 for, what was it, 20,000 units or whatever. Sold half on the double, and now the remainder I can use as I use as collateral, or I swapped it out to something else. but most importantly, tax-free. I have to admit, my taxes got a lot more complicated last year ever since I was able to start doing that sort of borrow cash against securities thing.
Yeah, my 2021 taxes stunk because just moving assets between various on ramps. It's like, okay, well, prove to Coinbase that that's not your actual cost basis. So now you have to have an amendment on all the tax forms that says the institution doesn't understand what I bought this money, what I bought this currency at.
Yep.
Yeah, it was real annoying. Like, pour one out for all the Ethereum miners, because you can only imagine theirs are even worse.
Hey everyone, random play to put out there. I'm not making it because my account is not approved for options trading, but it occurred to me that MDLZ Mondelez International seems like it might be a good one to get puts on, just because all of their fundamentals seem to be going in more or less the wrong direction, and they're going to have to report the whole quarter for last year where they didn't lose any value on their stock. So it seems like they got to take that hit, is my thought.
What exactly about their fundamentals suggests that they're due for puts?
It just seems like all of their profit margins and their net income and everything has been going in the wrong direction for several quarters.
Are they that Mexican chicken producer?
I think they make a lot of snack food. The one that made me think about it was Cliff Bars. For instance, I used to eat a ton of Cliff Bars, and then the price just doubled, and now I don't eat any.
All right. Yeah, there was one that I was trying to remember, and it was actually a Burry pick from about 15 years ago. But with avian flu doing what it's doing to all of our chicken and egg prices up here, I hear the Mexican chicken places are having a much easier time.
I think it's IBA, the Burry pick.
Hey, Opinion, where's the Discord link?
Ooh, I'll send it in the comments.
I finally logged on to mine. But I need the link to, I guess, join? Or the invite.
He charges 20 Canadian dollars or one U.S. postage stamp to post the link.
There you go. It should be sticky. $20 or one postage stamp.
Well, they're forever stamps, so I wasn't shortchanging you.
I didn't want to. I wasn't sure if I was clogging up the comment section with all those links. I don't really know how many people click them, but I also don't want to put an intermediary link to track that. So now that I'm saying it, maybe I should. In any case, there's your Discord link in the sticky. Also, quick question: how is everyone finding this talk? Mostly through notifications again?
I
A
still
lot of
don't
it.
get notifications. Oh, sorry. Go
I
ahead.
just follow you, opinion, and then I troll your posts and have one of my robots tell me when you make it.
Sort by new at 8:30.
I've tried the new or the rising. It won't do it for me for some reason. So I just click on Wall Street Bets, then find a good thing. I go to about, scroll down to where opinion's name is, and then normally he's like the third post down on that.
Same.
Same. I just go on Wall Street Bets, and it's usually the first posting there, like around 9 o'clock.
But it doesn't make sense that I still get notifications for confused money, but normally I get their pre-talk notification about 3 hours, 2 hours after this one starts. But I don't get no notifications for Wall Street Bets.
I go to the Happening Now tab in a web browser on a computer.
And I used to get them on the app. I've deleted the app, reinstalled it. So I don't know if it's because I'm on a poor man's Android.
Be redundant. Yeah, I'm not exactly sure how Reddit's talk notification system works. If I had to guess, it's that because the pre-market talk is earlier, or the other talk is earlier, you're getting the notification for that set up in their system, and then because this one happens within 8 hours, you're not getting another one set out. But then there's something else going on that's causing the notifications to be sent out in delayed fashion, and so as a result, yeah, you just end up getting one notification for the wrong talk 2 or 3 hours late. Beautiful.
So opinion, was the poor man and Android, was that the redundant comment?
Yeah.
Yeah, I feel honored. I would normally expect, expecting apologies and just nothing but sincere kindness from you Maple Leafs. I take that as a compliment.
Oh, well, thank you. And I'm also partially laughing at myself because I am also using an Android.
Gentlemen, I need quick kind of insights on something that I've been thinking. So I recently started reading about corporate finances, and there is this interesting concept that came in front of me, which was perpetuity. And so my wife and I, we are planning to buy a house, and we are saving some capital for that. But I was thinking that instead of putting it in like different kind of shares or ETFs or whatnot, if we put it in a dividend paying ETF or ETFs, multiple ETF, and then just kind of get that dividend out, and the quarterly dividends that we get, and we buy a property based on those dividends. How does that whole concept sound to you guys?
You have enough capital that you have enough
we
dividends to purchase property?
No, so we are building towards capital to buy a property, but instead of taking a loan out, I was thinking putting that in an ETF, which pays like a good dividend, and then use that dividend money to buy a property, like to get a loan or something, to get the loan payments done, that kind of stuff.
Cool. Oh, so instead of repaying your loan, you're investing it and then paying it down with the dividends?
Yep.
Yeah, I think that's common advice. Yeah.
Yeah. Like
some people who are extremely risk averse, or I shouldn't say extremely, who are just generally risk averse, especially at the rates that are going right now, might say that it's worth it to just pay down your mortgage because even though, yes, it's a lower rate than you'll probably earn in the markets on average, this money that you're paying towards your house is, in a way, guaranteed returns.
Right. And as soon as we're done with getting that house or getting the payment done, you can just that dividend's gonna continue coming our way, and then we can buy a bunch of other properties. Like that's how I'm thinking theoretically. I don't know how well it's gonna execute, but just want to get your opinion on this.
Sure. I mean, I don't think there's anything particularly special about picking dividend stocks versus anything else, or just selling off a certain portion as you need to every month, or whenever your mortgage payments are due quarterly, if that's the case. What do you think, Cardi? Because, yeah, at the end of the day, a dividend is just someone taking money out of the company and then putting it in your hand. It's the same as if they just left it in the company, except for tax purposes sometimes.
Yeah. Yeah, I appreciate your thoughts and your comments, guys. Thank you.
Yeah, no problem. But I think most people would generally say, yeah, invest in the market, take out that cheap loan because it's secured debt against your home. Probably won't find cheaper debt than that. And yeah, just bank off the difference.
If anybody's using Fidelity, do we know what are their like the margin loan interest rates?
So if you're getting shares on margin, you want to know what the percentage rate is?
Right.
Last I checked, and I'm not in my Fidelity account very often, it was like 6.7 or something like that. And then the other rate that they have is like 11%.
Oh shit. Okay.
Well, the risk-free rate is very high right now. So
Gotcha.
But again, I haven't checked those in a minute. But yeah, generally it costs a good penny to do things like naked short or buy shares on margin.
So it doesn't really matter whether you're buying shares or ETF, they're gonna charge you 11%, right?
Yeah, they don't care what it is that you're buying.
Gotcha.
I think the only case there would be if you were naked shorting something. There is Reg T and the other one, something 25 requirements that are determine when they have to halt your trading and threaten to liquidate you, and that has to do with how much margin you have available to you, whether it's portfolio margin or just cash sitting in your account. And if you get too far away from a profitable number, but that's a federal law, not a it's not something that Fidelity does specifically.
Right on.
I'm curious to know when the people who overpaid for their housing because of the ridiculously low interest rates will be forced to sell or liquidate or give up their equity.
Well, I got real excited because when I moved in fall of 2019 and had like almost 4% interest rate, and then thanks to COVID got to refinance below 3, and I was like, I'm making minimum payments for now until until the economic situation changes, because go ahead and give me that cash to come lose with all of you.
Hypothetically, you could buy T-bills at 4, or you could get T-bills at 4%, or whatever it is, and that cover your interest costs for the next 29 years, or 28 years now.
Right.
So did we talk about the AMC and Ape vote date being set?
We mentioned it, but I couldn't remember the exact date that it's set for.
Set for March 14th. Well, come on, brain. March 14th is when they're doing the voting. So, yeah, that's a thing that's happening. And in theory, Ape should go up and AMC should go down if you feel like playing that.
Already on it. I love my Ape shares being up.
And of course, the super bonus side of playing that play is when the MOAS comes, of course, you can ride Ape to the $10 million a share and then retire. So that's also definitely there for you.
Hey, you shouldn't mock people. I know somebody who still thinks AMC is going to $100,000 a share.
What if I'm not mocking? What if that's actually a very small but possible thing that I'm adding to the good side of the trade?
Yeah. What if what they think is stupid, though?
Carvana's up 2%. What's going on here?
It's a good company and it should be up. No, who knows?
Those vending machines just got more valuable.
I mean, well, we can't confirm it, but I feel like a lot of Carvana's big green days have been people are getting too many puts and creating upward pressure, right? Because everyone just keeps loading up on puts and screaming, why aren't you going down?
I mean, that's part of it.
Yeah.
I guess I'm curious to hear Hardy's opinion. So, like the Fed, would you say that the Fed is trying to increase employment?
No. They have explicitly stated they want unemployment to go up in order to arrest the velocity of money to reduce inflation.
So they do want unemployment to go up. Sorry, they want the unemployment rate to go up, right?
Correct.
So they want to squeeze wages.
They're doing it by making the cost of capital more expensive. So let's say a company earns 7% on its cash. When and they can borrow at 2%. So they're borrowing 2% to finance the inventory for an e-commerce website that's earning them 7%. So if you paid 2 and you earned 7, how many times are you going to do it? As much as you fucking can. Now let's switch the math up.
It kills like the project, like the return on investment on a lot of projects, right? It makes it less affordable.
Mm-hmm. So let's change it up. Let's say the rate's now 4.5%, right? So your rate went up 150 is that right? 150%, something like that, 125, whatever it is. You could make risk-free money and earn 4.25, or you can take that same risk and pay 4.25 to earn 7. Which one makes more sense to you?
It kind of like stifles investment in a way.
The
People
spread
don't
is
want to
lower than the
invest in their
risk-free rate.
company; they invest in rates.
The spread is lower than the risk-free rate, so there's less incentive for a company with a low margin to take on that risk to build out a new factory or to order more inventory, and therefore their growth slows down.
Because at zero rates, essentially the project becomes more attractive, higher return on investment.
Anything becomes more attractive because the risk-free rate is unacceptably low.
I guess. So I was curious how this connects to what Greenspan was mentioning around when he was increasing rates. I remember him famously saying he was shocked at how much the employees were willing to take in terms of wage cuts. And that was really one of the things that they're probably, I mean, they do want to squeeze wages down, right? I mean, with this high inflation, everyone's looking to get their wage contracts renegotiated. And of course, that's got to be, I would think that's got to be squashed Am I not wrong?
Keep in mind, when Greenspan was in charge, things were very different. Banks had a reserve limit. Now they don't. Various rules that hadn't yet been repealed, like Glass-Steagall, were still in force. So I wouldn't go that far just yet.
So, question for opinion: are you using TD Webroker since you're in Canada?
I am.
Is there any way to get around this commission of like $11 on options?
I think it's actually cheaper for, well, I guess it's over now, but I think they were charging $6 or $7.
I'm in
Still
Canada
quite
as well, and
expensive.
I was wondering if you can negotiate your commissions in Canada.
You can, but you're probably just better off moving to IBKR.
Yeah, that's what I think. I mean, why stay with TD and get charged $10 a trade?
The only
Yeah,
thing
TD.
the
Sorry, go
only
ahead.
thing they've done for me is like, I think after, if your portfolio is over 25K, they lower it by $2, but that's nothing.
Oh, they can lower the commission on trades by $2?
Yeah, I think if it's over 25, or I think it's 25, they lower it by $2. That's it.
Thank you.
And yes, Canadians, you can negotiate with your overlords. Step one is find all the tea that you can and dump it into the water.
I mean, as I look south of the border, I don't know if I'm very envious. I don't think I want to be there.
I mean, fair point.
All right, let's take a risk on some One Karma accounts. I'll invite you guys up. No comment history. Sorry, go ahead.
Well, I'm just gonna bring up, because these are like the three topics I talk about. All the uranium stocks have been just ripping for like the last week and a half, 2 weeks. So yay to that for like the two of you who might be playing it.
Oh no, that's exciting, but why?
Money seems to be flowing in. I don't have a specific reason. Sometimes money just flows in.
If you look at the GDP report, BE government investment.
Is there someone talking?
I think it was D Gentleman, but his mic like stopped.
Oh no, not again.
It sounded interesting for like the first couple words, but then
At least the first couple of words were good.
also Bed Bath and Beyond with a very healthy 20%. Totally normal. Good market.
Yeah, I went and had a call. I came back. That's the best stock on my tracker. What the hell, guys? What happened?
Did somebody say Carvana was up 2% earlier? That's the only reason why I raised my hand. It's 20%. You guys got to get your percentages right.
No, I said $2, not 2%.
We should all buy more puts. I'm sure that'll make it go down.
Oh, don't worry. I'm way ahead of you on that, buddy. As soon as it got to $10.
We are creating the squeeze. I'm so proud of us.
I'm telling you, those are going to be future egg farms. You heard it here.
No, honestly, with Carvana, I think that you need to pay attention to what's going on with their creditors, because apparently the family that owns the company has hired help to effectively use the creditors' leverage to basically cause them to fight against each other. So the creditors said, hey, so we make sure we all don't end up fighting against each other for this next 6 months. We're all going to come to the table on any agreement in terms of Carvana. So the family that owns Carvana and the creditors of Carvana are basically at war for who controls the company. So expect to see a lot of weird price manipulation, because they're basically trying to use different methods to reacquire control of the company. The Financial Times has a great article that was written on January 5th or 6th, I believe, that explains what's going on. So feel free to read that for those of you that are interested in Carvana.
Question for Hardy. I wonder, do you use the website Flippa to find websites that are for sale? I just was curious if you used a certain website to
It's
buy.
one of multiple that I use to buy from.
Okay, so they are reputable. Okay.
There is wheat among the chaff, or there are
Okay,
needle.
yeah, I kind of figured that. The things that might be for sale might be the weeds. The system or the service is okay. The marketplace, I guess.
Platform is fine, but as you get deeper into that particular industry, you start to meet people who are good at certain things, like building up a newsletter, or
Oh, I see. They build up something to sell it.
so I'll buy something where I'm good in the ad space to increase the RPM for the site, and sell it to the email guy who can take a high RPM website and blow it up even further with a good email list, and so on and so forth. So I
You
have
have a deeper strategy, much deeper strategy than just buying something. Okay.
Well, this is just a consequence of having done multiple flips now. So I've built up a network of contacts from whom I'm willing to buy because they're good at a certain thing, to whom that I'm willing to sell, or who are willing to buy from me because I'm good at my thing. Because building up a website takes a lot of different disciplines, and no one person has all of them well. So you find the people who are good at the stuff you're not at, who benefit from the stuff you're good at.
Find your missing your gaps in your knowledge and kind of find someone that fills that.
I found a couple of people to fill my gaps, but not in the way you guys are talking about.
Sir, this is a Wendy's. That stuff's out back.
Ha ha ha.
I don't get it. Can you explain? What's the joke?
Can you draw us a picture?
So yeah, if you want to go into the website flipping space, that's a good place to look, or a good way to get started.
Thank you.
While there's a lull in the conversation, shout out to Hardy. Found two stocks that recently have had some positive upside, but should be coming back down to earth. Looking at Coinbase and Foot Locker, and just keeping an eye on it because they both crossed Gamma Max recently. I believe Foot Locker has its earnings call on February 23rd. So there's options for the 24th, but I'm going to go out a little further and buy puts for March 3rd.
Crossing is just step one. Step two is what happened in all the previous crosses.
Yeah, so with Foot Locker specifically, the previous crosses after Delta neutral to Gamma Max cross, about 2 to 3 weeks out, that's when it returns to Delta neutral. So what I used was the Delta neutral price from the Gamma Max cross. So basically, I'm looking for it to return to about $37 to $38 in the next 2 to 3 weeks. But I would expect it to happen sooner rather than later because earnings is on the 23rd of February.
So you're using the December 2, the September 15, and maybe the June 2 crosses as your basis?
If we're talking about Foot Locker, then yes.
Okay, makes sense. Best of luck. Price did already cross below Gamma Max, so yeah, you're right. This could be a worthwhile play. So figure 3 weeks, maybe?
Yeah, I'm just worried because of their earnings falls within that 3 weeks. So I'm ready to take minimal gains, relatively speaking. Like I'm not going to completely wait for the double.
If you're doing IV, if you're keeping track of IV, right? Foot Locker, when's the earnings again? February?
I believe it's February 23rd, the Thursday.
If you're doing the 24th expiration, let's see, what's the IV for the 24th? So the February 24th IV right now is 56%. The number itself isn't important. What is important is that prior to the earnings announcement, the IV was like 42. Okay? So if you were to buy puts, let's say $43 put, the February 24 $43 put on Foot Locker, it has a Vega of 4.5 cents. So if you take that 4.5 cent Vega, the change in IV from 56 to 42 is 14 points. So 4.5 cents. 4.5 cents times 14 points. Who is that?
Content ad 8184.
Okay.
I got it. Don't worry.
Thank you, opinion. That 4.5 cent Vega times 14 points in potential IV crush represents 63 cents. So your $43 put, if you buy it for $2.30, which is the current mid, will lose 63 cents in value because of the earnings announcement, right? Because that's usually how IV crush works. And you'll have to recalculate this as time passes and earnings comes closer. Against that, you have 4.8 cents of theta. 25 days to go. Is that right? 25 days to go, and you've got 4.8 cents of theta. So 0.048 times 25. So you now have $1.83 of option value against your $2.30 entry price, which you expect to lose because of theta and because of Vega. So how do you would need delta in this case. Let's see, it's currently 0.44. So you'd need the price to move, if you take the $1.83 and divide it by 0.44, you need the price to move $4.15, so effectively down to $38.85, thereabouts, in order for your contract to break even net of Ivy Crush and Theta Burn. If you think that's going to happen, then by all means buy the put. Otherwise, wait till closer to the earnings announcement.
That makes sense. Thank you.
Neutral is currently at 38.06, so it appears this is already being priced in. So just something to think about. I'm not saying it's a bad play, just saying you need to understand, at least in this case, how delta, vega, and theta work together against your thesis, against or for your thesis. And for those who asked in the comments earlier, this is one reason why, with some very few exceptions, almost all my plays are below the current ask, because I expect the price to move toward my entry price instead of trying to chase it. Because say my entry price is $1, I need it to go to $2 in order to get my double. If I go to $1.10 as my entry price, the price now needs to go to $2.20 in order for me to double, and that percentage change increases dramatically. So that's why I try to find plays where the price will drift opposite my expected direction some amount, so I can get in closer to the bottom before it rockets in my intended direction. And I don't mind if 60% of my plays don't hit, because the other 40% will. And I'll make my doubles. And I should also point out, the plays that I post are the top 5 Gamma Max and top 5 Delta Neutral, sorted by the option open interest descending. So there are definitely more plays available, just I don't publish them all.
Hari, quick question. You still writing those cash covered puts against GME?
Yep, my effective buy price is right now $4. That is to say, net of all the premium I've collected against all the shares I currently have, the price of GameStop needs to fall below $4 before I start losing money.
Oh shit, that's cool, man.
There's so many, and I say this with love, apes who are buying irrationally, so I'm happy to harvest the premium they generate.
But you also long GME, if I heard it correctly in one of your previous talks, right?
So for every, well, let's say 5% of my of the premiums that I earn, I'll spend on speculative long calls on GME.
Gotcha.
So it's effectively risk-free money as long as my break-even price on the entire GME collateral that I have stays below roughly 20 delta.
And when it comes to calculating the effective price, do you do it manually or do you have?
I have tools that do it for me. Basically,
Okay.
measuring dollars in premium that I earn every week over the average cost of the collateral that I have. So
Gotcha.
my cost of collateral was like $36, but net of all the premium, it's now like $4.15, somewhere around there.
Gotcha. And correct me if I'm wrong, but any of the brokers are not going to do that calculation for you, right? Even if you're long.
No, this is the kind of thing you have to track yourself.
That's what I thought. Gotcha. Thank you, Ari.
Yep. Someone posted a question earlier. So prophecy, clever. They mentioned they heard about me borrowing cash against security in the context of selling half on a double. So suppose I take this works best at Morgan Stanley, but that's also because I have a strong relationship with my banking contact there. This may apply to JP Morgan, to Chase, depends on who you have with your wealth management team. But suppose I buy a stock for $10. I sell half at 20. So that means I have half as many shares with a cost base effectively of $0 because I already got my principal out, right? So that remaining batch of shares, suppose they're currently $20, basically means I can borrow $10 of value for every share in that particular pool of shares through Morgan Stanley, and then use that cash however I see fit. And usually what I do is I'll buy like a website using maybe 70% of that cash, use the remaining 30% as additional capital if I need to inject more resources, let's say hire content writers or get a developer to do a quick job for me, that sort of deal, in order to increase the value of the website faster than the interest rate will cost me. And then when I saw the website, put the gains back in the loan as a loan repayment, and then rinse, repeat. And the gains from selling the website, I can usually roll over into another website and expand that way. So I figure with the introduction of ChatGPT, I've been taking about 40% of the sites that I buy and using almost exclusively ChatGPT to write their content, just to see if, in the event that I get slapped by Google, to what extent they will penalize AI-generated content versus like handwritten human stuff.
That is excellent. We have to hang out more. I don't do the websites, but I get a hold of stuff here in the United States that's legal and fine. Here, you just can't buy it or sell it. It's antiques, and then I head for the border. I get it out of the country. It's not websites, but
Well, the advantage of websites and other digital stuff is that I'm effectively location independent.
So what would be the easiest website? I imagine a website that just depends on maybe ad revenue as its source.
The absolute is a website for which their revenue comes from AdSense, because AdSense is arguably the lowest of the available ad providers. So I have good relationships with Ezoic, with Mediavine, etc., to fill the ad space there. So where AdSense pays, let's say, $1 RPM, Ezoic or Mediavine, I could probably get $3.50 to $4 RPM revenue per 1,000 impressions.
So am I understanding that, okay, they're using AdSense and then you would switch them over to something else?
Correct.
Okay.
So an AdSense, generally a good multiple for websites is like 25 to 35 monthly revenue. So if a website's earning 1K, you want to pay between 25K and 35K of that website, for that website, if the seller is willing to accept. And then I change the revenue from AdSense to Ezoic. So let's say my 1K doubles to 2K a month, and then I can sell it again at that same multiple. So what once cost me 25 to 35,000 now potentially earns me 50 to 70,000 after roughly 4 to 6 months, depending on how much history someone needs.
So when I was looking at some website, this is all hypothetical for me, but I guess I'm looking at websites that would be under $5,000. Is that even worth looking? Are those basically just scams?
I wouldn't say scams, but generally speaking, if it's at $5,000 and we go by the 30 multiple, that means the website's earning $160 a month, roughly. You can't exactly hire a content writer for that much money, or that little money.
Well, that's kind of where I was thinking. Is there something that I can start small and build and flip? It sounds like that's kind of what you're doing, is you're flipping websites, right? Instead of houses, you're flipping websites.
I'm taking the private equity model and applying it to websites. So occasionally, in the beginning, I used a moderate amount of debt. I could have, not to be fair, the debt was meant as leverage. I could have floated the debt myself. I wanted to see if this could work without tying up too much capital. A moderate amount of debt at a lower interest rate back then to buy a website, upgrade its ad stack. So instead of just AdSense, I added Ezoic and OpenX. And I effectively doubled the monthly revenue. And 6 months later, someone was willing to pay me 30 months of revenue for that website.
Basically, Hardy's the...
I got 30 months of future revenue today that I can now reinvest.
Basically, Hardy is the Kohlberg, Kravis, and Roberts of digital real estate. I love it.
So you could almost, maybe you could look at it. Sorry, I interrupted you.
Oh, I was just going to say, or the opposite of what Elon Musk is doing with Twitter. You can look at it either way.
I can't afford Twitter.
I guess if you were starting out, if you could buy a site for a small amount and then beef up the ad revenue, then sell it back. Is that kind of a good strategy? Like, if you think about if you don't have
Yeah.
a lot of capital to
There are-
invest.
There is. That is. But keep in mind there are two main ways to increase ad revenue. The first is, of course, to increase the traffic the website gets. The second is to increase the value per impression of traffic. Does that make sense?
Yeah, either the unit cost or the volume. Is that kind of the way to think about it?
Correct.
It's either the unit revenue or the volume.
Mm-hmm. Ideally, you do both, but let's face it, not everyone is very good at both, myself included.
So I guess I'm just hypothetically thinking. Let's say that I can write content and I see a website that needs content update. I could kind of go in and do that and leave the ad stuff as is and try to add value where I can add value.
Correct.
Thanks for letting me pick your brain.
Yep. And that's where the bulk of my earnings go, or my windfalls, I guess is a better way to put it.
Unrelated question for you, Hardy. Oh, sorry. Eagle's still gone.
No, sorry, go ahead.
What do you think conceptually about the idea of having a chief operations officer that is actually just an AI?
Doing what?
Just like more of like a digital assistant, right? They're just setting all the meetings and sending out basic emails and transcribing meeting notes.
So that's more like a PA, not a COO.
Yeah, that's true. But
because COO makes decisions.
Eventually, I would like it to make decisions, but I'd like to keep my reach within reason at first. I don't want it out there just making decisions out the gate. I think that's a little far of a reach.
I would say to start out, you call it a recommender engine.
I like that. It's good.
What kind of notes is it? Is it taking notes from other AI members of the board?
I don't think any board members are AI, but if they were a really well-made AI, I might not be able to. I might be failing my own little Turing test here, and maybe I don't know that it's an AI.
I've got one for you guys that won't directly compete with what I'm doing. Since COVID, I do a lot of estate sales, so I do reselling. And since COVID, one of the things that I have been successful with is getting my hands on ivory, which has a lot of bad connotations because it is elephant ivory. That's exactly what it is. I don't know why people have it, but thrift stores and estate sales are very well aware that it is illegal to transact any type of business, any business at all, at least inside of the country, with ivory. So I've gone to how this all started is I went into a thrift store and I picked up some ivory and it was 98 cents. And as it turns out, it's antique. It's Japanese. Also, it cannot really be sold, not without paperwork. So that gave me the idea to try to find more. So I have been finding more and more and more of it. At an estate sale, if they know what it is, they also know that they cannot sell it. So they will literally give it away just to remove it from something that they have to deal with. And so it's essentially free because of the law.
I thought you could purchase it if it was free, like a certain date.
Do the recipients of this material require some proof of its provenance? Or is it very trust me, bro, when you get it across the border?
Oh, I don't talk about what I do with it afterwards. But,
Well, you might be in the clear here, and it might not even be elephant ivory. Do you have a way to test its specific gravity or hardness tester?
oh yeah, no, it is going to be elephant ivory. You look at the rings under black light.
I gotcha.
And versus it it
I mean, because I'm just saying, there's a lot of other sources, right? There's like walrus, there's like narwhal, there's muskox, which are still alive and around.
yeah, and there's also in the world there's legal elephant ivory, but not in the United States. It's not, and there's
no.
Yeah, there's an international group. There's a consortium that wants to shut down. I mean, they want to complete. If you have any of it, they just want to bury it, literally in the dirt, so that there's no market for it anywhere. But there are places in the world that license it and stuff.
Yeah, I mean, technically, I assume you're not in the U.S. Because if you were in the U.S., even your purchase of it could be construed as a violation of federal law. But thankfully, that's not where you're located.
I think if it was imported, now you may have got paperwork for it prior to 1990, it's legal to sell.
Yeah, you just have to say you have a lot of family heirlooms, right? Really
I remember
ivory trade. Come on.
watching something a few years ago where I forget where it was, what state or what country they put a bunch of their wood chippers instead of just say preserved. That's museum.
I think it's strongly implied that these estate sales don't have all the paperwork, hence.
Oh yeah, no.
Yeah, like I said, I don't know if you have to have the paperwork. I don't know the ins and outs of that, but I'm positive it's legal to sell even like state by state. If you were to do the interstate sale,
Your mic is the rainstorm when you're driving through is pretty loud. Sorry.
Or yeah, my apologies.
I wonder if you could just, I wonder if you could just have this stuff carbon dated. I mean, normally carbon dating gives you plus or minus like 3 or 4 years, 3 years. I don't know. I'm not like an expert on archaeology, but it's a pretty narrow range for carbon dating, and I feel like that would be narrow enough to. I don't know if they would consider that proof enough, right? But I mean, radiocarbon dating is accurate for science.
I'm pretty sure the answer to that would be no.
Minimum
No.
age. You need a minimum age to effectively do it.
Oh, yeah.
That's yeah. There's a lot of people that COVID killed a lot of older people, so that's what's happened here. And their estates are liquidating, and when you're dead, you can't really do things the way you'd rather have them done. So the paperwork gets lost, if there was such a thing. People don't bother with it. They don't mess with it, or they are unaware of it.
What about something that might be there that is of a less questionable origin, like burl, for example? Just that wood is normally $2 a pound.
Oh yeah. Well, some of the other stuff that I had done is jade, is antique jades. In particular, there's certain types, but I'm working on that, so I can't really talk about that. But anyways, it's fun. It's interesting. You get exposure to a lot of great. There's a lot of great stuff out there. People just have no idea what it is. Like my what is it? My avatar there is a poker chip, and that's from what is it from? 1998 Mirage. So that was the year that it opened. So that was 98-cent purchase that I sold for $180, and I had a small handful of similar chips. Cost me $5 to pick them up. So that's what I'm up to. Besides the stocks. I played SoFi bounces with SoFi this morning. That worked out pretty well.
I bought some jade when I was in Hong Kong. It's easy to tell if it's fake jade or not. You just kind of hold it for a while and see if it warms up. If it warms up, it's probably bullshit. Jade will stay naturally cool to the touch. Some sort of strange property of the material. I'm not a material scientist. I don't know the correct word for this, but like, even if it's exposed to heat, it'll stay cool to the touch.
So it's a giant heat sink, naturally?
Yeah, I mean it's a really bizarre thing. Like, so if you have like an actual, like, I have a jade like bracelet that I got in Hong Kong, and like it's always cooler than whatever the ambient temperature is, so it's always sort of cool to the touch. And it's a property of real jade, and I don't know exactly why it has that property, but it's well known in circles of jade collectors.
Got to get a black light and go scour for some uranium glass.
Dude, I found a bunch. So about 2 years ago, I was exploring this. There was this old city dump outside of Dayton, Ohio, and I was exploring it, and we just found a shit ton of uranite glass. And I was like, I think this is uranium glass, because I mean, this dump stopped being used in the 1950s, right? And so it had a bunch of old glass from like the 1910s, 1920s, and it had that kind of greenish tinge to it. And yeah, sure enough, we put it under a black light and it lit up like it was a damn glow stick.
Was it broken? Was it
Yeah,
broken pieces?
unfortunately, yeah. I mean, it was mostly broken pieces, but we did find a full vase, and unfortunately, it was in the car with me when I got in a car accident, and so then it broke.
Do some of the artists in the world a favor. Go bag up some of that stuff and put it on eBay. You'd be surprised. Probably get $30-$40 for, say,
even the
5
shards,
pounds
eh?
of it. Yeah,
Really?
Yeah, because they'll just they have kilns that they'll just recast it. They'll just remelt it. But getting their hands on it, I don't think you can create this stuff really. It's not that easy to create it. It's much easier to go reclaim it.
Right. I mean, the uranium is now in the 1910s and 20s, when people were using it for glass making, they didn't know the uranium had any other uses yet. So.
And makeup,
Oh yeah, I forgot about that.
Home science kits as well.
I got a uranium glass story. Is that I have there was this company, I forget everything, but it was one of the first pressed glass companies in the United States, and they made that custard glass, and their idea was to quickly make porcelain. So back in the day, that's how they thought about this pressed glass activity. One of the first things they saw was the opportunity to cheaply and effectively make porcelain. So I've picked up multiple pieces. I'd have to look up the glass company, but I can readily identify it or throw a picture up somewhere. And yeah, when I find that stuff, I love it because people don't know what it is. They'll sell it to me for like $5, $10, and I turn around, I can sell it to a museum. In fact, there's museums in Ohio I've talked to because this stuff is really hard to come by.
Yeah, I believe it. Probably Fenton, right? Fenton or Pilkington, probably one of the two. I used to buy glass in an industrial capacity many years ago.
Sowerby. I think the name Sowerby comes to mind. Yeah, those were fun when I got a hold of those. But what else is going on? I think I'm just checking my portfolio.
The porcelain itself super interesting, and it's very interesting how it came to the West. So the actual like paste porcelain, like the true porcelain from China, basically the ingredients were leaked basically to Europe, but they didn't know the specific ratios. And it's a lot like making concrete. If you don't have the right percentages, you can't make it. And so this alchemist named Johann Böttger ended up spending like 2 decades of his life trying every possible percentage mixture until he found the exact thing to make porcelain. And after that, it destroyed the Chinese porcelain industry because people could just make it in Europe.
Right. Because the Europeans were using wood and tin plates, and that stuff was really ugly on the table. When they got drifted what the Chinese were doing, that brings me to mind. You mentioned porcelain. That's the other one. I have pounds and pounds and pounds of antique porcelain from China, in fact. And regularly, I'll find a cargo plate. I don't know if people know what that is, but it's the early shipment of Chinese porcelain. I can regularly, when I identify them, I can regularly buy it for like $1 or $2, and I'll sell it for 20, 25. It happens a lot. I've got my hands on like in the past 2 months, I got my hands on like 4 of those. People can't identify them.
I'm gonna have to start looking when I go to yard sales and stuff like that. My wife and I do that as a bit of a hobby in the springtime. She's always going there looking for toys for the kiddos, and I'm always going there looking for old Magic card collections, which I then buy out and relist. But going to have to start looking at some of the dishware, see if it's porcelain.
You're gonna. I remember when I started doing that, and I started feeling sort of weird about it. But yep.
We have lost Hardy. So what was the Lucid talk about? I missed it. It was pretty dope, though. I know DeGentleman and a few others got some 10-baggers. DeGentleman, did you actually get a 10-bagger? I know Mask got one.
No, I was not playing that directly. I was trying to talk people rationally through what was going on. So my only advice to Mask was, when the halts were going on, to submit his asking price for selling his call option. And then I did approve of him also selling it for exactly $4.20 because it was Mask. But that price action was too crazy. I didn't think it would go from 12 to 17. I stayed off it.
Yeah, it really went to the moon. I'm sorry I missed the chat. I was like working on actual work stuff. And the next thing I know, I started seeing it blow up, and I was like, "What is going on?"
I think the greatest part of that was just mass, pure, irrational confidence in, not only on Wednesday, we talked to him and said, "Mass, will you double down on this position?" And he said, "Yes, I will." But he held it through the 100% gain, through the 200% gain, and really just hit the moonshot. So congratulations, Mass.
Very dope. That's what we're here for, right?
Is that a confirmed actual buy or just a rumored buy?
It's a rumor.
Yeah, it was all on a single rumor article that was published. On a single rumor, it pumped that much.
Yeah, it was kind of like multiple rumors coming in when people were hearing about it. It was like JP Morgan, the PIF, like, then it just felt like everyone was trying to buy it. And a couple days before, there had been this report about EV manufacturers and lithium batteries, and Lucid was mentioned in the same sentence as Tesla. So when you're mentioned in the same sentence as Tesla and Rivian, people start thinking, oh, could this be the next one to run up? And I think Mask was way ahead of the game on that.
Oh yeah, for sure. I've got 40 contracts open on Apron since we're talking about penny stocks. for
What
February.
makes you? Oh wait, no, I think I remember this. You don't like it. You just think it's gonna catch on with the squeeze focal, right?
Yeah, there's a lot of chatter about it on the different squeeze forums, and
What's
so
wrong with Blue Apron? Did they go through something recently?
there's nothing really wrong with it so much as if you look at them compared to the other like meal delivery services, they actually are in a better financial position than the others. That being said, all of the meal delivery services are heavily beaten down right now. So, being the best of a losing pack, or more accurately, perhaps being the best of a business model that fundamentally might not work, right? Like it might just not be a good model. It's not a great place to be. So, I mean,
So here would be the counter argument. Meal prep is a growing trend. Supply chain constraints made it difficult to justify the cost of purchasing these meal prep kits because you could have just made it yourself for cheaper. But if the supply chain constraints that we faced during COVID cease to exist and people go back to meal prep rather than, eating out, maybe Blue Apron is something where, after places with worse business models fail, people come back into Blue Apron.
Here's the problem, and I've used Blue Apron a bit. The problem I always find is, let's say they have a recipe, like, it's like, oh, curry, rice, and chicken. I don't know how to make that. And they have this great recipe for it. I'm just going to keep the recipe card. And if I ever want it again, I'm not ordering it through them. I'm just going to go to the grocery store and pick that stuff up. I no longer need them once I have the recipe card.
Right. I see that too as a risk. And also it's one of those things where it's like the free trial incentive for some of these companies. People know, like, I'm just going to sign up for a month and then cancel the subscription.
It wasn't the recipes that their gimmick, their business model is based on a weird type of thing. They're basing it on my girlfriend, basically, who last night was like, "You didn't make anything? Okay, I'm not going to make anything." And then she goes out and she went to a place she's never been before, locally, but never been, and just spent like $45 to bring herself home stuff. She brought me stuff too. I didn't really know about it until much later, but that's who they're marketing to. Is so in another couple months, it would make, if she keeps on doing that for another couple months, which she is going to, I can tell you, then yeah, Blue Apron is up to bat with us again. We're already previously 3-time customers. So,
You're rolling in that porcelain money, though. You got money everywhere. You can afford to take her out. You got a girlfriend. Come on.
Also, something I've noticed a lot with Blue Apron, and I don't know if it's just them, but they mess up the deliveries so much. You'll order like a chicken thing, and they'll send you beef, and then they'll be like, "Oh, my bad." I've gotten so many orders where they've given me like the wrong bags for stuff, or like there was one time I ordered like a noodle dish, and they sent me like a bag to make like apple tarts, and I was just like, seriously, I can't even like improvise a meal out of this. Are you joking right now? And when you call them, they're just like, "Oh, sorry, yeah, that happens."
Yeah,
and
I
then
think
they give you credit, right?
Yeah, and I was going to say, to further your argument, Scald, they also were in the news for having one of the worst working environments too. So if you are pro-labor, anti-work, if you will, that's why you get your wrong orders and no one gives a shit,
Yeah, but it's insane how if I would order like 3 things, at least like 2 of them would have stuff missing or like completely wrong, or they wouldn't include a recipe card. It was insane. I was like, you guys aren't even trying, huh?
I had pretty good success, but it was years ago when they first started. But like all the little bottles and stuff, I am not a green person by any means, but it seemed very wasteful too,
So I mean, I guess the question is like, this morning I saw it resolve a Scald Squiggle when it was 98 cents. Then it pumped to $1.06. My calls are at $1.50, and they're a month out. So, all I need is, I mean, technically I'm green on them right now. I can sell them right now for a small profit, but all I need is another serious day like this one, and I can exit with a pretty nice profit on it.
Yeah, thanks for shouting that out. I'm gonna look into it. I think that was Georgia Underwood who spoke about the girlfriend. I try and make sure that I always send her back with a little something for you to eat since I kept her up. Sorry about that.
I also think that with this sort of baby boom we got going on, these meal prep services might come into vogue as the babies start to get older. Once they're like toddlers, you can just feed them whatever you cook, right? But then the problem with having a toddler is they take a lot of your time. So it's very useful to have a meal that you can just throw into the oven or prepare very quickly, right? And then cook for the whole family. It makes life a little easier.
Yeah, I guess that's the hard cost to figure out because, if your girlfriend's going out and leaving for a couple hours with some guy and spending $45 for dinner, while you could just be spending, effectively $15 a meal to keep her home. The cost benefit analysis is there.
You could have DoorDashed that for 60. I'm just throwing that out there.
Also,
Blue
it
Apron.
it doesn't save you all that much time. It just saves you the time it would take to go to the grocery store and get the ingredients. The cooking time and everything's the same, so you're not real like it's
The
not
cooking
like
time is not the
10-minute
same
meal. It's still
because
like
they do the pre-batch and they do the pre-processing. Like I hear what you're saying, but
I
trust me,
agree.
as
It's still
someone
like 40
that
minutes to an
worked in the
hour to me.
kitchen, the amount of meal prep that's done beforehand, like they give you a recipe card, and like granted, it'll say 20 minutes and it'll probably take you 30 to 35, but to meal prep all that shit and go to the store would take you an extra hour.
A huge portion, a very good percentage of their marketing tactic is drawing in between the relationships in the household of a male and female, and that they both have things going on and they don't communicate that well. If they can get into the fridge, they're good. Their part of their business is done, and it's kind of up to us. So
That's a great way to put it. Once they're in the fridge,
the guilt factor. Their only problem is their shipments have those big giant freezer bag things that you got to throw away, and then when you get their brown bags, they don't conveniently fit into the refrigerator. They need to make them like like McDonald's Happy Meal type of boxes, boom, 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 and then it would be better. Their business model works, and it should be working. I don't know why they haven't been posting profits though.
So Blue Apron keeps them home. Is what I'm hearing. If you want to keep your girlfriend home, get some Blue Apron. Saves marriages.
No. It's not all that because I mean, it's not that. It's just that she could eat well if she wants to, but she is just going to. And I know because I have an ex-wife that was the same way. I know what they're going to do. I just know it. They're going to go to a nice restaurant, give it to me, and the end. They are the worst about this. It's just give it to me now. Type of I deserve it, and I want Blue Apron to fail really because that means I don't have to stand in front of the damn stove and cook the whole thing. That way my life would be easier. But if you have them in the fridge, then it is a good product. I don't understand how come they're losing as much per share as they are. It seems like to me like pretty simple, right? Just in each metropolitan area, don't worry about the cornfields. Those people are eating corn, okay? But hit like some places in New York, all the big cities, LA, Atlanta, Boston, Chicago, and have your fruits and vegetables there, line everything up, and get those little boxes in everybody's refrigerator. They should be able to post profits. That should not be that big of a deal.
That's a cornfield resident, I can confirm.
I mean, keep in mind though, all the people in the city in New York don't actually have, like stoves and stuff like that.
I know.
This is also a fact.
I just like go to like the farmers markets and stuff, and we load up there, and then we go to this wholesale store, either BJ's or Costco. Like, I guess I forgot how grocery stores worked, because this idea of planning out meals like a month ahead, like, no, dog, I'm gonna go to BJ's and I'm gonna buy an ungodly number of yogurt cups because I know my wife eats one of those every day. So,
Hey, Scott.
they sell them in 24 packs. It's great.
Scald, I haven't asked you for a while. We haven't brought it up. How did the mink taste? Have you tried one yet?
I did not eat the mink. I did not eat the mink. But yeah, that was a thing that happened. It was on the news like 3 months ago. 40,000 mink got released by an eco-terrorist group. This actually happened. This is not a simulation. This is real life. 40,000 minks got released in northern Ohio, and they contacted everybody that had a hunting license and were like, "Can you come help us shoot mink?" And everybody was like, "Yes, we're going to get a brand new coat."
Scald, are you the one whose neighbors has like free range chickens, and every now and then they'll just lay eggs in your yard and you just pick them up? Or is that someone else?
No, that's somebody else. But that actually happens at my grandparents' house, or my parents, my kiddos' grandparents. So that's pretty funny that it's happening in multiple places.
Guys, look at the call options on Blue Apron. It trades at $1. Isn't the thing here to do is to go long and then do covered calls? I mean, you're gonna
basically like buy 100 shares and start selling the 250 strike a month out.
Yeah, that's the thing.
I would cash in those profits that you have on those call options, go long on the stock, and ride out. It really does depend. I mean, if you're talking about several hundred shares versus thousands and thousands of shares, that is going to make a difference.
I stand corrected. They don't have a 250 strike. It only goes as high as $2 a month out.
But look at just a couple weeks out.
Yeah,
they have a weekly, which means let me take a look.
Yeah, I mean, you could fully collateralize your position in less than 2 years. In a year and a half of selling monthlies on this, assuming that it doesn't move too dramatically and your shares get called away, which if that happens, great, because you made money. But you could fully pay for your entire position in a matter of months. Like in 15 months, I think, 16 months, you can probably pay for your whole position.
Sorry to pull away from Blue Apron for a second. We can go back, but Carvana's at plus 35%, and I feel like that can't go unmentioned.
Yeah, I'm waiting to get back in, but relative to how much they're pushing the price, the last time they did a push this hard, they were able to basically move it from like around $5 up to around $8. So if they can get a similar volume of shares in, and I'm looking for like over 3 million shares to be traded today, then look at $15 as a range where I would start buying puts again, because prior to this week, when it got in $8 range, it usually got slapped back down to earth. But now that they've reclaimed like the $8 level and the $9 level, I'm wondering if they can get it to 15 by the end of the week. And I think this is going to be a common theme with this company, just because there is so much short attention, and they have basically enacted a poison pill to prevent somebody from coming over and doing a hostile takeover of the company.
Problematically, when Carvana pumps on these days, it comes back down so quickly. Typically, now it's not every time, but sometimes it comes back down so quickly that you don't have time to actually buy the puts, because it's just so juiced from the run up that there's just too much IV in there, and by the time it starts heading back down, it's too late.
I hope it pulls a full GameStop. I want it to go into like the 400 range. Do it, Carvana. Just break the market.
Why though?
Because it's hilarious. Sometimes chaos is the best thing that stocks can have, Scald.
Opinions got to pull the buy button again.
I would really expect it to get slapped back down to earth if it gets anywhere above $14.50. But this is the same shit that happened with Lucid the other day, where like just throw rationality out the window. And if you're a fan of volatility, have at it. But I'm gonna just sit on the sidelines.
Wow. It looks like Hasbro messed up.
Yeah, they cut jobs and had a horrible report. They felt, yeah, we talked a little bit about that last week. It's a frequent flyer here. Not too much, but it's having an okay day today, like, comparatively.
Yeah, apparently I mean, in a way, it's pretty clear that their CEO doesn't actually understand the business that he's in. Which reminds me of an old Peter Lynch quote, which is always trade businesses that could be ran by any idiot off the street, because chances are it'll eventually be ran by some idiot from the street. Which is true.
Not even limited to like Hasbro proper. Even the CEO of their Wizards of the Coast wing has been on the record like, I've never played Dungeons and Dragons, and I don't get it or why it exists. And it's like, yeah, that's what I want to hear the Wizards person saying. That's exactly the words I want from you.
Well, what's interesting is they basically just surrendered the IP on some of their unique monsters because they didn't understand they were unique. So, like, one of the things that kept you from making a copy of Dungeons and Dragons is if you used some of them on, like, elves, yeah, they're from, like, Norse myth, and, like, dwarves, who the fuck cares? Like, you can't copyright any of that. But, like, and Tolkien's estate failed at keeping the copyright on that. But like ring wraiths, like that's pretty unique to Tolkien. Like he could sue you if you had ring wraiths, right? What they didn't understand was in Dungeons and Dragons, there were certain monsters that were like Gary Gygax created them. Like he made them up entirely. And apparently they let that expire. There's a big old post on Reddit about it right now on the D&D subreddit. They just let all of them go into the public domain, which is real dumb.
I know Beholders was one of the bigger monster IPs, if you can, that was like specifically them that they had the exclusive rights to.
Yeah, and that's specifically one of the ones they just surrendered the IP to. They just surrendered the IP on Beholders, which is like the dumbest shit. It would be like if, I'm not saying Mickey Mouse, but it would be like if Disney was like, you know what, Goofy, fuck them. Anyone can use Goofy. You want to make a Goof Troop movie? Go ahead. Like, no one really cares, but like it sort of matters.
Why is that?
I mean, to be fair, though, like you said, those specific monsters were what limited people from actually carbon copying. Like, you could make a very similar copy with similar rule sets, but you couldn't have like a lot of their specific IP. If they've actually let that slip, you almost can, right?
Yeah, there's a post right now on Reddit about it.
Again, I know we'd already talked about how they basically belittled their audience already. So you belittled your audience, and now you've let go of some of your profitable parts of the business. Smart.
Right. I mean, this just goes back to the idea that's like, if you're a company whose the majority of its profits come from its IP, you better manage your IP. Like Disney does a bang up job managing its IP. They do a great job, you know.
Yeah. I'm afraid about getting sued. That's why I cut off the laugh. I could have kept going, but
right. Disney might sue you for your Goofy impression, right? Yeah, like they do a great job. But you know, here it's like, yeah, it's crazy.
Got too profit driven too quick.
So it was on Monday. I mean, excuse me. It was on Friday that Carvana jumped to $8 a share. Like, it's hard to read this. So
no, there was a run up or on Friday. That was like the main catalyst. 27, I believe you're referring to. And I had said earlier, mistakenly, 3 million shares. What I meant to say was I think that was the Foot Locker volume I was looking at. But the last time Carvana had this type of run up, the day prior, there was about 38 million shares in volume. And then the day of the run up, there was about 90 million shares traded. So yeah, just kind of look for that same range of volume.
Yeah, and it's like 47 already.
Yeah, so
through the day. So
the previous week when it had that nice little pump, I wasn't sure how many shares traded that day. Hold on just a second. I'll pull it up. Yeah, so they did 36 million in volume that day. So it's looking like a similar setup where you have about 40 million traded the day before, and then about 90 million traded the day of the run up. So hopefully 2 weeks out from now, the puts will start paying out. I just don't believe the momentum, and I think this has more to do with the battle between the creditors and the family that actually owns the company trying to find a fair value price for this before they start shopping the actual company out. But there's no news on that. I'm just going based on what's happened so far since January 5th.
Yeah, I'm trying to sell Carvana short. It won't let me sell it short.
Honestly, I would not be surprised if you get a better opportunity to do it if it breaks above $13 or $14.
I also feel like with so much volatility in it, wouldn't shorting Carvana right now be stupid expensive?
Yeah, that's what I was saying earlier. The problem is some of these spikes on Carvana are so short-lived that the IV doesn't really have time to like come back down. So like you can't even buy your puts at an affordable like strike. So it's hit or miss. Like sometimes it'll stay pumped for a few days and the volatility will start to drop again, and like then you could get cheaper puts. But like that doesn't happen every time. I wouldn't be surprised if tomorrow Carvana was down 20%, right? I could be wrong, but just I've been watching this stock for a few months now, and it seems to happen.
I think with earnings coming up, there's a chance that you could see it pushed in higher ranges for extended weeks at a time. If you need like a reference to when this has happened in the past with this particular stock, look at the push it had August of last year. Look at the push it had November. There are a few times where you get 4 trading days of sustained upside momentum before it falls back down to earth. I agree with you. There are a lot of times where the run up is so short lived, the IV doesn't make sense. But I'm hoping with earnings in the near future, it does get more attention, and there are more believers coming in to support the upside right now.
So if it's so unreliable because of the quick movements, and this could be the stupidest thing said today, so I might win that prize. Could one just wait for that sell-off period and then buy shares, anticipating a? Never mind. Actually, probably still stupid. I'm just gonna leave it there. I'm done.
No, I kind of understood what you were saying. Like,
I don't like it as I say it.
no, I kind of heard where you were trying to go with it, and I think this is one of those things where playing the guessing game, if you're a newbie, seems like a smart idea. But as Scald has mentioned, and I'm not calling you a newbie, Rad, this is like more to the crowd like that is looking at Carvana and doesn't understand volatility. Like, it's easy to be like, oh, when it goes up really high, it comes down fast too. So maybe I can time this. But what I'm saying is, historically, it's been getting pushed slightly. This week, it got pushed very hard, and you might have like a week to wait to buy your puts.
No, you're good. I hated the words as they were coming out of my mouth.
Mm-hmm.
So,
Well,
do we think that with? Oh, sorry, I was going to talk about Stranger Things and Netflix. My bad. I don't want to derail this conversation.
No, let's derail it. Let's do it.
No, go ahead. I just put in an order for a leap put option for Carvana. As you know, if you, I mean, you can try to time it. You know, we can watch it every day, but I mean, it's way oversold. Everybody's shorting it, so at some point they're going to run out of little sheets of paper to push.
I mean,
And that's anyway. It's a low bid. It's a low bid on a leap option.
Hey, Rad, on the good note, Ape is over 2.25 right now, man. Running.
Yeah, of course it is. Because could you imagine if somebody thought that it was range bound at $1.80 and sold on Friday because they were like, "Oh, it'll go down during Fed speaking anyway, and I can get in cheap and then write it up because they're not going to announce the vote date anytime soon." Imagine if someone did that. That would be so crazy if a human being did that on something that they were super
I did
believing
the
in.
same thing. Don't worry, Rad.
They-
Like I got out of my ape at 180, but I FOMO'd into it today and bought dollar puts on AMC for the 17th of March,
Hey, Rad.
which are already up.
Thank you for your. Sorry to cut you off, but thank you for your honesty. I wasn't trying to really razz you that much. I thought it was a good thing, but thank you for being honest.
No, look,
Really.
you didn't know, and if it hasn't become clear, I will call myself out when I am wrong. One of the things that, and this is not at anybody here or even saying anyone here does it, I hate it when people are like, "Here's all my good plays," and that's all I'm going to talk about. It's like, no, you make mistakes. A lot of people listening here are new traders, and they need to know that, like, your fuck ups teach you 10 times more than your great 10 bagger ever will.
Again, though, I do appreciate it, and I agree with you 100%.
As for if I'm going to get back in, if it drops down, I will, but it's up 20%, and as it goes up, that takes away the upside and increases risk. So I'm not going to rage trade it because that's how you lose money. At least I didn't lose money.
Well, but if your theory is still that the price converges, why are you not getting puts on AMC?
Because I think the price will converge. I don't ever trust puts on a meme like AMC because it could just randomly have a 20% pop because it's AMC and AMC does that. I'd feel more comfortable holding Ape because then at least if AMC does a stupid run, Ape in theory should do a stupid run. But that's just me.
Yeah, that's kind of why, rather than just having puts on AMC, I'm getting underlying shares of Ape so that, you know, if AMC does do something crazy, at least I'm able to get out of my Ape shares and then use that capital to buy AMC puts.
My hope is that today, maybe for like some of this week, there's just a lot of hype and then everyone kind of forgets or starts actually realizing that the vote might not pass and it pulls back. And if it goes like sub $2, then maybe I'll, take a little shot at it if AMC stays above 5. We'll see, but I don't want to do it the first trading day after the announcement. That feels like asking to lose.
If you want to talk about trades that didn't work out, Silvergate Bank is up, had a nice little run up today. I was dumb enough to think that it would go below $10 once they reported that their earnings per share was negative $18. But I forgot about this thing called an accountant. So, yeah, that's one of those things where you think a business is bound to fail, and you can say, hey, this is a guaranteed money-making opportunity because the price must go down, and you can just be dead ass wrong.
I warned you guys about short and Silvergate.
Yeah, but I had to burn my hand.
I hear you.
Just remember, the markets can always stay irrational far longer than you can stay solvent.
Well, banks are especially... it's especially hard for a bank to go under because, they could just call the Fed.
Too big to fail.
The best customer, too. I mean, yeah, you don't want them going out.
Well, see, that's the thing is like the Fed was positioning itself around Silvergate as we do not have exposure to cryptocurrency. But here's $4.3 billion Silvergate because your balance sheet is fucked. And you lost $18 per share. And you basically need to lay off 40% of your work staff to even have enough like runway to survive as a business. It's like the blood can be on the wall, but if you're buying puts, like Brad says, you're giving people capital to run the price up on you.
My personal theory with this is that it's interesting because they were given $4.3 billion, and then a few days later, the FTX executive team, not Bankman-Fried and those guys, but the guys that came in to clean up the absolute shit show that is FTX, were like, "Hey, we found a few extra billion," and I'm like, "Oh, really? You just found it, did you? Just sitting around somewhere?" And like, to me, I wonder if these two dots are connected. You know?
Come on, Scald. You've never misplaced a couple $1 billion behind the couch. You know how it is. The remote falls back there. You put your hand down. You're like, oh, look, the giant wad of cash.
They are connected, Scald. I'm not sure if you saw, but just last week, behind the scenes, they came in and needed a payment from SBF. And guess where their $700 million was? Sitting in Silvergate Bank.
Yeah, I told you guys it's the crypto bank. Told you.
I don't want to go too far down that rabbit hole, but it's kind of funny. I think Sam bailed himself out. I think that's why they didn't tell us who the signer was. It's himself, right?
Which is like almost incriminating. Like the fact that he was able to pay that is like almost evidence against him. Like I don't know if you paying bail to evidence against somebody.
Yeah.
But like,
technically, they don't pay it, but they say, "Look, I have these assets, and somewhere, somehow, right, and some wallet or some account. Yeah, I got $250 million. Yeah, someone."
Are we going to get the ultimate moment and Dog the Bounty Hunter is going to be chasing after SBF somewhere in northern Minnesota while he tries to cross into Canada? Can that please be a timeline? I want that so bad.
If that happens, I wouldn't even be mad about how much money I lost shorting Silvergate.
Yeah, just to see him smoking, light a cigarette for him in the back seat. I didn't want to tackle you, bro. I've been there, man. I've been there.
Sam's back there admitting to a bunch of crimes he doesn't realize are crimes while Dog's talking to him.
Yeah, we got to get this guy on WallStreetBets.
To your point about Carvana earlier, Scald, Silvergate, when I was talking about it earlier, I had seen it rip up, but apparently I missed my opportunity to buy more puts because it's coming back down to earth. It ran up to $15, and right now it's already back at $14. Damn you, market makers.
I've actually reconsidered having him on WallStreetBets because then I'm like, man, there is a non-zero chance that we get a subpoena. I mean, it's a low chance, but not zero. Be like, opinion is unpopular, and Hardy and Skull Crypto now have to show up to court because Sam Bankman-Fried came on WallStreetBets and admitted to a bunch of crimes in a room full of 1,000 people. Like, that would not be great.
So speaking of crypto, BITI is at new lows relative to where I thought it was going to be. Is anybody else looking at calls or just holding BITI into March?
Yeah, I took it on the chin from BITI. I will admit that. I did not think this pump would sustain like it has. I'm still of the opinion that it might not sustain. And so I'm considering just buying BITI outright and just holding the shares. It has some decay on it, but like, I don't know. If I held it for like a couple months, I don't think it's really that big of a deal. If I held it for like, say, 2 months, 3 months.
Yeah, I've been using it as a weekend hedge. So like when the market closes on Friday, I'll kind of add a little bit of BITI to my boomer portfolio. And then if Bitcoin runs up or Ethereum runs up, I'll sell some of my Ethereum. But if BITI prints over the weekend, then I'll sell some of that. But I've been finding that this past like 2 months, holding it directly has not been good. It's been more of a hedge against my actual like crypto positions.
Yeah, that's how I was using it as well. So I guess I shouldn't just say I took one on the chin. I should say I successfully hedged. But I do have crypto. It may surprise you guys to learn that I actually do hold some crypto.
And I have none. I do not own any crypto.
That's also an equally fair strategy. I used to hold Tesla. I don't hold Tesla anymore. I've not held Tesla in a while. But yeah.
Yeah, it happens.
The Grayscale Bitcoin Trust has had a great month, and Grayscale, however, is still in the middle of this legal battle. So I'm wondering, with Bitcoin trading at monthly highs and GBTC trading at monthly highs, whether this is like a run-up before they start liquidating Bitcoin on the market, in which case I would happily love for them to do that just so I can get cheaper Bitcoin. But at the same time, I'm wondering what your guys' thoughts are on Grayscale, because they have an Ethereum trust and a Bitcoin trust that's traded publicly.
Are you familiar with tracking errors that occur in trusts in general?
Yeah, we talked about how there could be tracking errors, not to mention if they were to actually liquidate the trust assets, the slippage that occurs from going out to the open market, etc.
Right. Also, OSINT analysts have only confirmed a little over half of. They're trading at like last time I looked, they were trading at like 50% discount to Bitcoin, and interestingly enough, there was like an OSINT analysis chain peeling on Grayscale, and they were only able to really prove that they held half the Bitcoin that they said they held, which I think is interesting because it's like they might actually be trading at true value.
The discount now is 42% according to Y charts.
And it got as wide as what? It was in the 60s, I think, at one point, 60% discount, but it's really come off that in the last month.
Yeah, but I mean, if you look at that percentage gain, right? That's just the percentage gain in Bitcoin, which is be the percentage gain on a reduced number of Bitcoin holdings. Because I mean, the way the trust works, all their purchases at 60,000 are weighing them down now, right? So those are Bitcoins they bought at $60,000 a coin, and it's now at less than 60,000.
And they're still talking about, quote unquote, unlocking the value when they get it approved to do that, make a true ETF and not. Aren't they still talking about that?
Yeah, it got denied. Basically, they want something that tracks spot and is not constructed as a trust.
My read of that was that they wanted to do that on paper, but what they really wanted was to get a ruling against them so that way they could keep their current accounting model. I mean, I'm not a lawyer, but I'm just saying the arguments they put forth were not the strongest. And I think you could have made a stronger argument. So then I have to think, why would you make an argument that's not great? Well, maybe you want a court to rule against you. So that way, when someone comes back and says, why are you doing accounting this way? You can throw your hands in the air and say, the courts made us do it, right? And then you're pretty much absolved of legal liability.
The way it is now, you have to be an accredited investor even to buy into it. You know, it's not something you can just buy on the open market.
No, you can buy it on the open market now.
Can you?
Yeah. So, for example, like GBTC, I can just buy shares of GBTC. And at some point, they could say, hey, we're unlocking some value from the trust via this method. The issue before was that when they were only allowing accredited investors to actually buy into it, once that changed, the company that they were allowing to issue new shares of the trust, they also had this weird financial entanglement because basically they were the parent company of a company that gave them a loan. And the company they gave a loan was one of the only companies that could issue more shares of the trust. And then it became this weird entangled thing where it's like Scald said, their incentive looks like they do not want to break up the trust, not to mention because like once they realize the value of the Bitcoin that they sell, they can't collect fees on basically maintaining the position on that Bitcoin. So they would rather have a massive amount of their shares trading and never unlock the value of those shares because they collect the fee on managing those shares being issued.
That's correct. They're basically disincentivized to do the exact thing that they said they were going to do, which didn't make any sense, right? So it makes sense why you would throw the case, right?
It smells fishy. Thank you for that explanation. I didn't know they had changed that much. That's why I just hold it.
Yeah, take a look into their recent lawsuits. They have a lawsuit from Genesis, I believe, or Gemini. Don't quote me on that, but just look at the grayscale Gemini, Genesis, Winklevoss. You'll find like plenty of information about who can issue shares of the trust and all that good stuff.
Thanks again.
Well, I'm out, gentlemen. I'll see you all later.
Guys, I just made a play. It's boring as hell though, so I'm not sure if you guys are gonna like it. It's a short straddle. SPX December 27. So that's 5 years. It's both short a call and a put at the 4,000 strike. So at the money. Does anybody here short leaps or buys leaps? By the way, I don't run into too many people.
What's the general idea behind that trade?
Just a hedge.
Against what?
The SPX.
I understand, but what are you hedging against?
Anything between now and 2027. Wait, I don't understand your.
I guess what I'm trying to understand
there's no particular event that I'm anticipating from here in a year or 2 years out. It's just I don't know which way the market's heading, so I'm shorting both. However, what I can tell you is that the options right now are skewed to the downside, so the call options are higher in premium than the short options. So the market is determining that since it's skewed, the market is anticipating there's going to continue to be volatility till 2027. So they're increasing the premiums of the calls more so than the puts. That's what I can tell you. That's what I'm seeing.
So it's a straddle for you.
Yes, sir.
So
yes.
so long as that price stays in between your 2 points, it's a moneymaker.
So as long as it stays between the difference between the at the money with the 4,000 versus the premium collected, because it's a straddle. So the break evens are, what are the break evens? 1 second. Let me do the math here. The break evens are large, by the way, because these are. So the break evens are 5,400 on the upside and 2,600 on the downside. So as long as the price stays between those two levels on the SPX, I should be good. But again, they're skewed to the downside. So let's say the market drops, a dramatic drop. I'll be in profit faster than if I just wait till 2027 or whenever I decide to get these off. Does that make sense? Because the premiums are more expensive on the call side right now. So let's say we crash in 2, 3, 6 months, like a big crash. I'll still be in the green, and it gives me enough of a buffer. Again, the buffer is 2,600. It gives me enough of a buffer to exit.
You're going all the way out.
Profit.
You're going all the way out to 2027.
Yes, sir.
The year 2027. Wow.
Yeah, I only short leaps. I never do anything less than a leap. But what I did notice, did have a previous, like 2 weeks ago, I made the same trade, one contract, $4,000, the 4,000 level, one contract. I would expect that the premiums, they relatively stay the same. There's not much decaying going on for both of these, even if they're straddles. Plus, it's 2 weeks out, and it's the same strike price, same expiration, 2027. What I've noticed is that the premiums, forget theta decay, it's just the market, the premiums on these are contracting for both the puts and the call side. So I'm already up on the trade 2 weeks ago on these on another 2027, both call and put options at the 4,000 level. I'm up 3,000 on those. So I never knew this on leaps until I traded them. If anybody has more insight on how the contraction on leaps, it's just they're falling in value so fast, way faster than any theta decay. Even with the rally, by the way, they are falling in value.
I don't know.
What do you mean you don't know? Say an opinion. give your unpopular opinion.
No, I mean, no.
To me, the trade makes no sense because you're saying, hey, volatility is going to be high. So I'm selling something to where I basically want the price to stay within a range, which doesn't make sense to me.
Well, volatility is high. That's why the premiums are increasing. And they're increasing more so to the call side than to the put side. So the market is pricing in that for the long term of these options, we're going to keep hitting lower. That's what the market's pricing in regarding volatility till 2027. Now, the reason I do a straddle is simply because I don't know if the market we're going to be in a bear market and then we're going to bounce back next year. Who knows? I just don't know. But the thing is, I have a big enough buffer to see where the market plays out from this year, next year.
Wait, hold on. So if the premium is higher to the upside, doesn't that mean it's more likely to go up rather than down?
No, it's more likely to go down than up because for an option seller, since there's a bigger increase of a big rally, they're increasing the premiums on the call side to compensate for the bigger risk taking when the market rallies. Similar to in a bull market, that same position, there's going to be a premium on the put side. If we were in a bull market, there would be a premium on the put side instead to compensate anybody who's shorting puts in a straddle because there's more of a risk to a downside, whether it's be black swan events like 2020 or any other event. So it's all about compensation.
Oh, I see.
Yeah, it's all about, and that's when the bull market, it is skewed to the upside, where in the bear market, the market makers are pricing in that skew to the downside.
Yeah, I guess because it's so far out and most of us are expecting the volatility to, well, let me take that back. I'm personally expecting the majority of the volatility to occur within the next 2 months. Specifically, I expect February to be down relative to January by at least 3%. So going that far out just seems like too galaxy brain of a trade when you could just not make the trade, because you're basically saying, I have no information, so I'm using market pricing to decide which trade is valuable, which I don't think is a bad idea. But at the same time, it doesn't seem like you need to make the trade at all. And you're not really hedging against anything other than the fact that you don't know anything about which way the market's going.
Well, that's the point of the hedge, because you don't know where the market's going.
Right. But I guess in the traditional sense, I would be like, oh, I have 80% of my fund in SPY, and I don't know which way the market's going. So to hedge my position in SPY, I'm going to sell these short. That's what I thought you were saying, but it sounds like you have no underlying position in SPY.
Well, just to go back to what you were saying at first, that is what I was saying. I really don't know where the market's heading, whether Powell raises rates or not. But I'm just telling you what the market makers are pricing in these call options higher than the premiums right now. I don't know if we're going to tank as much. I don't know if we're going to tank a lot. I just know that the market is pricing in a downward, just a downward move. It could be the downward move from the beginning of January to where we are now, or it could be a sharp downward move. I really don't know, but that's why I'm hedging.
So what, probably a little regarded for me to understand, but what would be the maximum downside you could experience in February?
To be honest, to me, it doesn't matter. Okay, because again, these are 2027 options.
Well, I just remember you basically being panicked about some position you took.
Oh, that was, yeah. Let me go back to that. This was SPX option I did just now. The one I was panicking about. Let me go. This was the one leg. This wasn't a straddle. This is one leg out the money. 2026 leap. Strike price is 4,800. So this one, I only did a one leg. I didn't do two legs to hedge. And this was, I sold it. This was regarded of me that I sold it at the bottom of the rally, the huge rally we had. We're still in. And because the market just rallied hard, these call options went to negative 50K because they weren't at the money. So since they were out the money, obviously the increase in risk for a large move is greater.
Gotcha. So with this particular position, what are you going to be complaining about in a week and freaking out about in February?
This one, I just hope that the market goes down, to be honest, so I can break even on these. Right now, it lost value.
Hold on, I'm just
down.
putting in my SPY 435 calls.
Okay. This one, the one that I was panicking about, I'm still down 7,000. It keeps increasing because we keep rallying, and I don't have anything to hedge. I don't have a put to hedge. So this one was a bad trade. But since it's 4,800 level, that's new highs basically. The market is, I don't expect the market to break new highs anytime soon. So I'm just holding on to these and letting theta decay at least work with me, and hopefully every month it keeps decreasing a little bit by a little bit.
I'm just kidding about the SPY 435 calls, but good luck to you, sir. Like, I think it's an interesting play, but I think that relative to the other position you're in, I'm just kind of confused why you're not trying to hedge against that one wrecking you rather than like entering into a new hedge against market uncertainty.
I was going to last week, and my buying power, since this is a single naked call option, and I was going to put a put option, I noticed that there was no change in my buying power except 53 cents additional that would have to put up. I guess, how my broker calculates these. I'm using TD Ameritrade. How TD Ameritrade offsets these. I don't know. I don't have that kind of level of IQ to explain why I don't need more buying power to put a naked put. However, at this point, I'm just letting this. I'm just like I said. I'm just letting Theta Decay do this, and I'm just starting to put on more good trades to cover this one. I think we're gonna tank in February, and if I put a naked put option now to hedge this one, I think I'm gonna suffer more losses than making up for this one. If I put just a single naked put option to hedge this single naked call option, I just don't want to take that risk if we just dump on the market. So I'm just starting to put on straddles. That's it. No, nothing naked for me. I'm letting the losers run. If that makes sense. Letting the loser run. I'm just inversing. I'm letting the losers run and cutting the winners.
Honestly, there's like no hard and fast rules. I think you just have to constantly be reevaluating your plan.
I think this is the only bad trade that I had. But I'm just gonna stick to SPX or XSP, leap straddles. But yeah, this was nothing single leg for me at all after this one.
I think the risk you run relative to what it sounds like your downside is that after the FOMC meeting, you'll see the usual volatility around the speech. But
True.
Because so much of the rate hike has been telegraphed, there is no sustained downside momentum, and we continue to race towards 415, 420, 435. And then you're like, well, fuck, now I am adding more to my downside because the market is continuing to go up.
Right. I don't disagree with anything you just said. We could rally. And like I said earlier, the market was pricing in the call options higher. So every rally kind of hurts me a little bit by little bit.
The new position you added also hurts you additionally if we continue to rally, which means you are not hedged against your already upside. Like basically you have asymmetric risk to market upside, right? And you added more asymmetric risk to market upside. So why are you not potentially getting something that pays you for market upside?
The pricing for the 2027 leap straddle that you're talking about, the new one. What hurts me is this naked call option every time we rally. What doesn't hurt me as much is the straddle that I put on just now, because the pricing for these leap options moves so slow. That's why. Like I said, the break even is 5,400 for SPX. I mean, do you really think we're gonna break 5,400 anytime soon?
Yes.
Okay. Well, that's that's the only thing that could pretty much hurt me.
You basically told me that the first trade you made, and I'm not harping on you, dude. I'm just like articulating it. So from what I heard, the first trade you made was a bad decision. You did not correctly
naked call. Yes.
Right. You did not properly price in the probability that we experience rapid upside. And
no, my biggest mistake.
That, right?
What I got killed on is because I didn't put a put option, and I didn't out the money.
But let's just stick to the
let's say
so basically that one leg did not benefit because there was rapid upside in the market. And I think what I'm trying to tell you is that you just bought something where you just told us the market makers have priced it into the contract,
right?
The potential for rapid upside. So not only did you sell something not pricing in the upside, you bought something in that priced in the upside, but altogether you're still like screwed if we go to 450, dude. So I'm just saying, like, maybe look into something where you don't get wrecked if we actually go to 450.
Well, okay. I mean, you do have a point. It's just there's a difference of the naked call option with the at the money straddles that I have. There's, like I said, there was two big mistakes that I made. It was out the money options when they go, I guess, when you're selling them and they go against your direction in a rapid way. Out the money options gives you the biggest loss because the premiums just ramp up. Additionally to that, I didn't put a leg option on that one to hedge in case we move up. If I were to do instead an at the money straddle, there's less volatility on the position as a whole for at the monies instead of out of the money, right? Because out of the money options, when they go, let's say, let's put it simply, if you go long out the money and it goes in your direction in a fast way, you gain a lot of profit, right? Well, what happens when you buy an option at the money instead and it goes into your direction? Well, you don't make a lot of money compared to the out the money, but you still make a profit. But the main thing is you don't make a lot of money. So when you put a put option on that, it offsets whatever gain you had for the call option, which was at the money. So that was my biggest mistake, that I didn't do out the money and I didn't do a put option on top of that. I guess the only good thing was that the only good thing that I did on that play was I put it at the 4,800 level. I think that's the only good. That's the only silver lining I can see. But it was definitely a regarded play of mine to put a single naked out the money call option.
All right, ladies and gentlemen, I think it's noon now over in the only time zone that matters, Eastern time zone. So going off this one comment I see saying, okay, I'm done. I think we're going to wrap it up here. Thank you so much for everyone for coming out. Good luck the rest of this week with FOMC and tech earnings. And as always, we'll see you again tomorrow. Don't lose too much money now.